All right. Hello, everybody. Welcome back to the channel. It is Sunday, September 7th. We are here for the Sunday market futures. It has been a long time since we got to just sit and be like in a studio, normal place, not traveling on the road, even though we'll be back on the road in Vegas in a couple days. But we are here. This is not my new studio. This is a actually recording studio in the apartment that they offer for free for anyone to use. And it's completely soundproofed. So I am still soundproofing my current studio. We got done by like 60, 70% of it today. But when I practiced like talking, it still sounded like there was a reverb. And I was just like, all right, why don't I just go downstairs? And so apparently you can book this space for like 2 hours every single day. And so let me know if the audio is good. We don't have a professional camera or anything like that, but I know the audio is like the biggest thing for a lot of people. So audio should be good. And I think we'll be here today and tomorrow morning for the market open. And then the rest of this week, I'll go through the schedule. The rest of this week is going to be weird with all the shows, but we'll be back to normal on Monday next week. And then we should be back in the regular studio. Audio's good. Audio's crisp. All right, perfect. Yeah, this place is total. I mean, you can see it in the back, right? This is all soundproof. So we should be good. All right, what's up, guys? It's been quite the weekend for those of us in the hoodie community. Obviously, one of the coolest things in the world happened, which is that Robinhood got included into the S&P 500. We got a lot of macro stuff to talk about. Basent had a new interview, got a ton of different charts I want to show people. We're getting into the CPI week, which is going to be very, very important because we had important macro data last week in regards to the jobs, non-farm payrolls, which we'll talk about. We had a revision in June. We had a little bit of a miss in July, I guess it's, or August, I guess it's more than a little bit of a miss by about 50,000. And so that brought up the rate cut probabilities. Markets were fine for like the first hour of Friday. Then they kind of tanked because bad news became bad news instead of bad news being good news. So we'll recap all that macro stuff that happened and talk about the implications of that macro stuff going into this week where we get CPI. But I think for a lot of us, the biggest headline is obviously S&P 500, and we'll talk more about it. But dude, it was crazy. It was pretty crazy. My flight got delayed, which is why I was even able to stream it. Otherwise, I would have, honestly, I don't think I would have been able to stream it because I think I miscalculated how much time I actually had for the announcement before the flight. Like I would have had to literally be boarding while the announcement was coming out. So it got delayed by 3 hours. And that was great for me because then I got to just go outside and do it impromptu, and there we go. So it was awesome. It was pretty freaking awesome. It was a long time coming. I think a lot of people expected it would happen. The fact that it actually did happen, though, was important. So we'll talk about Robinhood. We'll talk about the S&P 500. We'll talk about all the other macro stuff we got going on and get ready for this week. This week, I think, could be a relatively volatile week. I mean, we survived, if you want to call it that, the first week of September, where it was ugly, but it wasn't that ugly. I think we ended at what? S&P 645 or something. S&P 640, 645.96. We got to a high of 652. We got to a low of 634 on Monday. So relatively flat for the first week of September. And I don't want to draw any conclusions from that because obviously we got 3 more weeks left and we're going to see how this ends up playing out. But so far, kind of looking like August. Ugly in the beginning and then starts to recover. Now, if we get uglier throughout the rest of September, it's going to go the opposite direction of August, but we're going to see how this plays out. And we started off September with a bang, with Robinhood, AppLovin, and MCore joining the S&P 500. So it was exciting. It was very, very, very exciting to see. And it was pretty cool to see that finally happen for all of us. Yes, there's actually a ton of ETH news as well. I think people saw the Fidelity tokenization of treasuries on Ethereum. I know a lot of people are... Not a lot of people. I would say there's more supporters of BMNR than not, but you've got a lot of toxicity online about the stock because it went from 50 to 41, and apparently people can't understand that stocks, will go through periods where they don't just go up. And so you got a lot of people just saying ETH is a scam, this and that. And I'm like, you got to look at the data. And so we're going to talk a lot about the data, but the data, regardless of what's happening to the underlying price or to the derivatives of that price, to the leverage equities of that price, the underlying asset seems to be, or rather I should say instead of asset, the underlying network that the asset's value is derived from seems to be growing at a rate that I don't think we've seen before in the context of crypto. So we'll talk more about that and see the implications of that going into the rest of the year. But here we go. We're back. How many people have me on and Sunday Night Football on? Because apparently football is back. I didn't even know football was back. Dude, I just typed in, look, I'm gonna show you guys this right now. I just typed in NFL stock on Google. I meant to type in NFL schedule. Apparently, there's a company called National Fertilizers Limited. Year to date, it's down 17%. All right, so we don't care too much. Is this in India? Is this rupees? No, it's a $48 billion. But INR is Indian, right? I think this might be an Indian company. Yeah, I meant to type in NFL schedule. But okay, who's playing today? The Packers, Baltimore Ravens, and Buffalo Bills. That's the big game today. The Packers already play? Ravens and Bills. Okay. Okay, cool. So that's the game. All right, so I'll hopefully be some background commentary while you're watching the game. And we're going to have to deal with this every Sunday, given NFL football is back. Uzi, what's up? Kevin, Arwed, Lords, thank you for being here. Phil, what's up? Casey, Derek Stevenson, Troy Austin, what's up? What's up? Duck, Venom, Mitch, Tony, Philip, Alex. We will talk about the jobs report. I didn't even see that there was a 13,000 negative revision in June. I didn't see that on Friday. I missed it. So I only saw the 50,000 miss for August, but I didn't see that there was an actual revision in June. So I think that's actually also why the market kind of tanked in the middle of the day, because people were like, oh, wait, like we're actually losing a lot of jobs, which is the bull case for rate cuts. Obviously, there's the fine line between how many jobs do we lose versus how much the Fed can stimulate with cuts. So we'll talk about that nuance, but I don't know if it's going to have that big of an implication this week unless CPI is really bad. And so hopefully CPI is not the worst in the world. Andrew, Ryan, what's up? What's up? Gene, Steelers fans, David. All right, let's do this in the chat before we get it. We got 8 minutes until the overnight markets open, and then we'll get into all the headlines after we look at the price targets. Who's winning the Super Bowl? Put it in the chat. Who's winning the Super Bowl? I'm going with, at the end of the day, I'm a Swiftie. So I'm going with, what's that team? Chiefs. I'm going with the Chiefs. Going with the Chiefs. That's one of the only teams I know, to be honest. And I'm going with the Swifties. So I want to see if there's any name that I see. Okay, I see a lot of 49ers. Who put the Jets and the Giants? We don't win Super Bowls. I'm technically a Giants fan because I'm New York, but we only win a Super Bowl if we're playing against what's his name? Tom Brady. No shade to the Patriots fans, though. A little bit of shade, but no shade. No, I actually really respect Tom Brady. The fact that he went to Florida to end his career and win another championship, that's actually insane. But okay, Cowboys don't win championships either. Come on, let's not get ahead of ourselves here. I know enough about football to say that. Okay, I see a lot of 49ers. All right. I guess it'll be 49ers, or at least that's enough of what the sentiment here is in the chat. I don't know, dude. I'm a fan of greatness in general, so I'd love to see anyone. Why is no one saying Josh Allen? And didn't SoFi just give him a lot of money? I don't see that many bills here. I see a lot more of the 49ers, but all right, we're going to see. Every Sunday future show for the rest of, basically for the next 5 months will be NFL football night along with the mid futures for those that watch both. All right, so 6 minutes until we get into the opening bell or the overnight bell. I guess we'll talk about Hoodie for the next 5 minutes, and then we'll get into all the macro stuff we got to get into. First off, I guess let's ask this question in the chat. How are you guys feeling? If you had to describe it in a word, 2 words, a phrase, a sentence, I guess for me, it's just grateful. It's really freaking grateful. Seeing that happen was quite incredible. Again, I think all of us thought it would happen, but none of us really knew if it would happen or not. And I didn't want to get my hopes up because I got my hopes up a lot in June and I was thoroughly disappointed. So I'd rather be under promising and over delivering. And once we saw that spike up, it was like, holy crap, is it real? And it took me about 5 minutes to confirm it. But Robinhood, AppLovin, and MCore. Robinhood, AppLovin definitely deserve it. I don't really know MCore, to be honest. But AppLovin and Robinhood, $100 billion companies, absolutely deserve it. Richer, vindicated, surreal, awesome. My cousin was sitting next to me on the bench that I was at. And she owns a ton of Robinhood as well. She just got into it's been about since October of 2024 when we met in India. And I really got her and my uncle into selling calls and puts. That's when she started really investing. And, so she's just listening to me scream into my camera. And there's all these people where we are in the park. And they're just what is this guy? What is happening right here? But her portfolio hit an all-time high because she has a bunch of Hood. And so it was really cool just to be with her in that moment. It's been 7 months since I've seen her and be in that park bench and get to kind of see it play out. The only regret I have about that stream, and I realized this when I got to the airport, I was like, damn it, the entire stream I did on freaking Webull. I was like, it was an S&P 500 stream thinking that Robinhood would get in, and I'm streaming the whole thing from freaking Webull instead of Legend. And I was like, well, if Vlad was watching, he was probably going to be upset about that. But I was just like, damn it, should have been streaming on Legend. But I think that also segues into the conversation around Hood Summit that's coming up, which is going to be in a couple of days, and I'll talk more about that. I mean, I've tried streaming with Legend for a lot of streams, and it's just like, it's not that good. And I think I can say this because I have a very large position in Hood, and I think we need to be critical more than be super biased. And I hope I can speak to some people at the event and tell them, now look, they're not optimizing it for streamers, they're optimizing it for active traders. But if they want me to stream with it, there are certain things that just need to change. And I hope I can talk to some product people and let them know. Like, for example, you see how Robinhood on this is saying up 4.3%? It's not up 4.3%. It's up 6% after hours. Now, why is it saying 4.3%? Because for some reason, it's using the intraday move and the after hours move and combining the move percentage to tell you how much it's up when you're looking at the stock. And that's not accurate. And I need accurate numbers, right, when I'm streaming from this stuff. And so I need to be able to see like what the percentage move is. And although Webull's design is not like that phenomenal, like it's just very simple to get the most accurate percentage to be able to tell you guys. So there's just certain things they need. Yeah. And I also agree, if they made it a desktop app instead of a website, that would make it a lot more easier as well. Like there's just a bunch of little things I think they can fix. And now, granted, they're not optimizing it for streamers, but if they want streamers, which, you know, it's pretty good marketing for them. Like so many people ask me every day what software I'm using. If they want that, then I think they have to fix a couple of things. So I am looking forward to actually talking with some of their product people and being like, dude, I want to stream with this thing, but not even for 1 millisecond. When I mean not even for a millisecond, when I was streaming that S&P 500 inclusion, did I think, oh, let me use Legend. And usually, you know, I mean, like when I do Robinhood earnings, I try to use Legend. Like I try to use their product, especially if it's going to be something about them. But I didn't even think about it. I was like, dude, it's not even second nature for anymore. I just like go right back to Webull. In fact, Chris tweeted a week ago, I'm going long Webull because Amit's not using Legend on the NVIDIA stream when we have like 20,000 people. He's using Webull. And I think Robinhood saw that tweet, and that's why they invited him. By the way, Chris is going, for those that missed that announcement, so you will be able to see Chris in Vegas. It's actually going to be his birthday on September 9th. So I'm actually really happy. It's been like a year since I met Chris. Last time I met him was a little bit over a year, like end of 2023. So I'm going to be excited to see him again in person. And it'll be his birthday on September 9th, so that'll be really cool. But yeah, I think there's just a couple things they can improve there. I think for active traders, you know, the fact that Jason is not using it, and so many people on Twitter, like underneath my post, they were tweeting like, hey, if Vlad can just copy this and copy that, like we would just love to use this over Webull. I think there's a lot of things they can change. And if they can meaningfully change that stuff, then I think it's going to be fun for the trajectory of this Legend product. So given the entire summit is dedicated towards Legend, I think we're going to see a lot of cool announcements, hopefully stuff that's obviously more geared towards revenue generation for the product. And, you know, it's a 1-year-old product. And given Vlad is an absolute killer, I think he has a lot of things in mind to get this product to be even better in the future. But regardless of the product itself, Robinhood is a top 500 company in the United States of America. It is absolutely incredible to see. And I'm just so blessed to be on the journey and be a messenger of this journey and to have this entire community together. Having said that, it is 8 p.m. Overnight markets are open. Let's see what we got. Hoodie, 108.49. 108.49, 109. I'll talk more about my thoughts on price action based on S&P inclusion. I have a lot of ideas in terms of what could happen to the price this week. So we'll talk about that. 109 on Hoodie. Palantir, 153.16. That's up about 5 cents. Tesla, 352. Nice Tesla, 349 close on Friday. Very nice to see that happening. So kind of breaking out from that 330-ish range. Also, Tesla released the Robotaxi app. It's like number 5 in the App Store for travel. I know that a lot of people said that like they needed to buy Uber for the app. Well, Tesla Robotaxi app is doing pretty okay. So we'll talk more about that. But Tesla's up 352. S&P 648. That's green. That's up $1.38. Not too bad. Nvidia's down 166.40. That's down about 50 cents. AMD is also up a little bit. SoFi 25.60. That's flat. Grab right here 512. We do have some pretty breaking news on Grab and GoTo. I'll talk about that later, but it's very bullish Grab. Just got to be a little patient on this one, but I'll talk about that news. And I think we will eventually see it materialize in their earnings. Google right here, 234, that's flat. Amazon, 232. Meta, 755. Reddit, 239. Salesforce, 250. PayPal, 68.21. Apple, 239. Bitcoin, 111. Where is ETH? Bitcoin was at 113 on Friday. Ethereum, 4305. Ethereum was actually at like 41 hundo earlier in the day. So you got a little bit, as you can see, this green candle spiking up. Now it's down from where it was. It was at 43.33. Now it's at 43.05. So kind of chilling in that range. Nubank is down 7%. I have no idea why Nubank is down 7%, but it's down. Kind of weird, but it is down. There's got to be some news there. Oh, no, now it's back up. You guys just saw that, right? It went down to like 13.14 to now 13.50 to 14.75. That might have been either a bug. Let me check Webull. Nubank, they have the price at 14.75. So yeah, that was probably a bug across the board. Okay, so Nubank is back to normal. Raytheon, that's up a little bit. Dude, did anyone see Microsoft was below freaking 500? I did not see that. I did not see that on Friday. Apparently that's where it closed. Dude, it gave up pretty much its entire earnings. But this thing was 550 a month and a half ago. And now it's not 550 anymore. So this one, we got to see how kind of this ends up playing out. But Microsoft, one of the next big tech names to kind of get hit. Opendoor doesn't trade on mobile for Robinhood. Let me see if it trades on Legend. It probably does. Opendoor 678, up 1.95%. Closed at 660, up 6.79, or at 679. I think it got to 7. Did it touch 7? Yeah, it looked like it touched 7. So that's up 2.11%. I mean, look, the Open Army is absolutely crushing it in terms of buying up the stock and holding the stock. I am just kind of concerned of when the company would do an offering. Now, granted, maybe they don't do an offering. If they do an offering, though, they'll get a lot of cash on the balance sheet, and then they can kind of guarantee their stock doesn't fall below $5 because then it would be trading way below book if they raise a couple billion. So it would be some short-term pain, but I do think you would kind of create a floor to the stock. So we'll see how that plays out. Still don't have a new CEO yet, but people are buying it up. And if you are in the story, if you are taking a gamble on it, or if you genuinely believe in the turnaround, I mean, it has worked out for you. So 680 right there on Opendoor, that's up 2.11%. ASTS, that's up 1.82%. HIMS trying to get back to 50. This one was at 42 on Monday. Now it's at 48.80. Not too bad. NVIDIA goes green, 167.40. I did buy some more NVIDIA on Friday along with BMNR and Hood. Hood back to 109.55. We're going to see if Hood can get to 110. Nebius, give me a second. Let's see if that one's doing okay. Nebius at 64.47, that's down 1.53. CoreWeave, that is also down about 1%. And then Palantir, 153.51. BMNR, again, I don't think it trade. Does it trade on this? No, it doesn't trade. Well, no, I guess it does a little bit. 41.70. Yeah, you got a little bit. It was at 41.50 on Friday. So a little bit of movement, nothing too crazy, but not a ton of volume on BMNR. Yeah, I mean, it doesn't trade after hours, but or overnight, but there's like slight volume on Legend. Sometimes that comes. The same thing with Grab. Like Grab 512 to 516, that's probably like less than a couple thousand shares of volume. So not the most liquid. Hoodie though, going for 110. All right. So before we get into all the macro news, let me just give my quick thoughts on what I think could happen with Hood in terms of price action this week, and then we'll get into all the rate cuts. Or I'm obsessed with rate cuts, with all the analysis around the macro, which probably is going to lead to us talking about rate cuts. Look, I think Hood should pump tomorrow. I think it should. S&P inclusion is a big deal. September 22nd is when the rebalance happens, which means that a lot of funds will probably buy it before the rebalance. The rebalance itself, September 22nd, could be a big deal. I don't think the price action matters. I care more about the company long-term. Getting into the S&P 500 is very, very bullish. Obviously, that means that 401ks, institutions around the world, they're seeing it as more legitimate. That legitimacy obviously leads to a lot of momentum on Robinhood, the stock. That's what happened to Palantir. That's what happened. I mean, this is what happens to generational companies that get legitimized. If you're a regular company that gets into the S&P, it's whatever. If you're a company that already has momentum, already has the wind behind your back, already are executing at a phenomenal level, like Palantir, which, by the way, bottom December 2022, S&P September 2024, Hoodie bottom December 2023, S&P September 2025. So kind of incredible, both of their life cycles. But that's when the institutional ownership really does matter, because that means you have a lot more funds that finally can say to themselves, okay, I can buy Hood. So would it surprise me if we see 120 this week based on S&P inclusion inflows and the active trader event, which I don't think is going to announce a product that like, oh my goodness, the stock has to move up 10%. But what if they do? What if they do? What if they announce something where it's like just so obvious that people are like, I need to have more exposure. This is a game changer. I don't know if this is going to be that type of an event, but I mean, dude, they're doing it in Vegas. They're making it a big deal. So maybe it is. AppLovin as well. That one's also green based on the inclusion into the S&P 500. Congrats to anyone who's in AppLovin 530. This is basically where it was at in February. And so it is now recovering to those levels and, went down all the way to 200. So a lot of people had a chance to buy that dip. So my gut feeling is Hood has a really good week. However, if we get a crappy CPI, if JPOW says something, if there's like a billion macro things that could get rid of this pump just because, hey, if it gets to 120, what if some people say, well, I bought it at 100, I'm good with my 20%? Or what if some people say, well, I bought it at 80 and I kind of want to hedge going into 2026, I'm going to take some profits. Now, the fun thing about this is, let's say Hood does go back to 95 like it was on Friday. I mean, bro, people are buying that dip. It's going to be hard to not buy that dip after you realize that they're going to get into the S&P. They have all these events coming up. Banking is launching in the fall. Like, there's so many catalysts that I think if you do get a dip, unless it is like very hard in the macro, S&P falling 4 or 5%, which if that's the case, I think you just buy the whole market at that point, right? You buy anything. If it's Hood independent of the market, which again could happen, I think people are going to rush to buy, which kind of protects it from not getting to the lows that we saw, hopefully, on Friday. I did buy 50 shares at 97 on Friday. So I know some people took advantage of that dip. My mom's shares did end up getting called away. So I mean, like, look, I've not usually had my calls get into expiration, but I know a lot of people were messaging and just posting about it. Like my uncle had 109 calls on IBKR, that got called away. My mom had 104s, 105, that got called away. My dad had 103, that got called away. Now, granted, the way my mom and dad are using Hood, it's like half of their position is for trading, half of it's long-term. So like she's kind of okay with taking the profits there. She bought it at 100 last week. It's sold at 105. Like she kind of doesn't care that much. But there are some people that wanted to hold their shares long. It was at 95 at one point. They're like, all right, it's not going to touch 107. And then after hours S&P inclusion, it touches 107, doesn't close at 107 or 108. And apparently it can still get called away. So, and the reason for that is not because of the closing price. The reason for that, from my understanding, is because of people exercising their options. And if they exercise their option at 104, even if the stock doesn't close above 104, in this case it did, then obviously those shares have to be called away. So yeah, it was a bit annoying for some people. I did not have any shares get called away. A lot of my covered calls are at 120, 125 for like October, November. So I didn't have to worry too much about that. I do have some at 110 that were expiring on Friday. I rolled those to this week at 110. So we'll see what happens with that price action. I might, just extend that into like the 120s, 130s for January, February next year. We'll see. But the point is, some people did have their shares get called away. So maybe you get a dip to buy them back, or maybe you get to kind of keep them and see where it plays out from there. But regardless, we did get some good price action. Obviously, that's what's helping Robinhood right here gain some momentum. So if we get a monster move, for those that have covered calls that are underwater, you'll probably have to roll them. But for those that, if you want to keep your shares, if not, then maybe it gets called away and you kind of take some profits or you sell aggressive puts. But I'm just happy we got into the S&P 500. That's the most important thing. I mean, will it be harder for SoFi to get into the S&P now that Hood is in and Coin is in recently because they're all fintech? No, because I thought it would be hard for Hood to get in because IBKR and Block and Coin got in 2 months before. So no, I don't think it should be hard for SoFi. If SoFi keeps executing and doing their thing, they're going to get in. I don't know if it's going to be next year, but SoFi inevitably will be an S&P 500 company. I think it's, you can't doubt Noto's execution there. I just don't know when. They meet all the requirements. It's just, they just became eligible like for the past 5 months. It's probably going to take a year for them to like stay eligible. Like Robinhood's been eligible for a year, right? But it took, you kind of have to prove to the committee you're worth getting in and you can stay at those levels. So I think SoFi will get in, and I don't think the over concentration of financials will have that big of a deal. By the way, Oscar, I mean, that thing, shout out to Ronnie. He was on the channel 3 months ago talking about this thing at $12. Again, I just never got deep into it because I don't understand healthcare, but apparently there was an extension of the ACA subsidies that came out on Friday, if I'm not wrong. And that's why this thing pumped almost to 20, pumping a little bit right now. And also someone probably knew about that for the past 2 weeks, which is why Oscar started breaking out. I mean, that's ultra bullish Oscar, because getting rid of those subsidies in the ACA would obviously be not the best thing. And that's why it fell from 23 to 11. I guess people knew that was coming back. Friday was solidified, and there you go. That's why Oscar got a bit of a pump. So not the worst thing in the world for Oscar, and that one's also getting some momentum. So if I right there, 25.55, Google, we are going to talk about Google as well. We got a long show, got a bunch of different topics. We'll get into that. Salesforce right there, 250. Dale's down a little bit. NVIDIA, I have some thoughts on NVIDIA. I think there's a little bit too much FUD that's being thrown out there about this one. So we'll get into that as well. Salesforce right here, 250, PayPal, 68.24, ELF, 134, Apple, 240. Nice to see Apple and Google, which quite frankly are carrying the S&P. If Apple and Google did not have their moves last week, the S&P probably would be closer to the 635, 637 level. We're almost at 650 because of Apple and Google. So it's nice to see that diversification of Mag 7 momentum. And then you got Tesla right here at 353. That's also picking up some momentum on the robotaxi release. So you're starting to see a lot of that stuff get momentum. A lot of people are tagging you with Open Door. I don't like that these guys are begging. What are your thoughts on that? Look, I mean, I've muted it from my entire timeline. I don't know why they care so much about me. I think they really want my validation of the stock, and everyone does not need to be in everything. I don't want to be an Open Door. I don't want to analyze the company as deeply as some other people. And so I'm not going to. And so it's just that simple to me. In general, I think we'll do a little segue for 5 minutes, and then we'll get into all the macro stuff. What I have noticed over the past weekend, because I don't know, it's hard to kind of ignore some of this stuff, is, and this is what Derek told me back in Miami. And, I didn't really fully understand him at the time, but boy, did I feel it over the weekend. He said the biggest challenge for you next is going to be, as your brand grows, that a lot of people are going to start hating for whatever reason they can come up with and start to become very jealous. And I didn't fully understand it at the time, but this was a pretty momentous weekend in my life, right? On Saturday, talking it up with Carp live, and he's on the stream, and that's like, Palantir has been like my entire brand for the past 5 years, and that was a big moment for me. And then the day after that, the second biggest thing that I've covered in my career as a content creator in the stock market, Robinhood gets into the S&P 500, right? So you have 2 back-to-back days of big momentum, and I don't make that much of a big deal of it. I'm like, okay, we did the Carp interview. That was cool. Robinhood S&P, I made my content, made my tweets, made my videos about it, and I moved on with my life. I had 2 tweets about Robinhood being in the S&P 500, not like 50 tweets spamming. Oh my God, can you believe that? And then I had 1 thread today on Carp, on the Carp interview, and 1 YouTube video. Like, it was not this like, oh my goodness, I've been waiting 5 years for both of these moments to happen, and I'm going to obsessively tweet about it. I'm like, no, dude, like, this is life. I'm living in the moment. It's kind of surreal that it's happening, but as Vlad tweeted on Friday, job's not finished. You cannot get complacent. These were big moments in my life, but you move on. And what I observed over the weekend is the amount of people that just absolutely hate Hood and Palantir. And as a result, they're hating the person that's associated with them. It's quite incredible just to see the level of animosity that people have. And it's getting to the point where people are like, oh, all Amit does is talk about Hood and Palantir. This is all he has. Like, well, hold on. First of all, if you've known anything about my channel, we've evolved into an entire market open, market close, which is like a lot of things that we talk about every single day, not just Hood and Palantir. My tweets, like, if anyone goes through my tweets, they are not obsessively Hood and Palantir. If you look at some of these other people in the communities that people keep tagging me in, it's like every single tweet, 500 tweets a day are about one ticker. It's like, no, we talk about macro, we talk about geopolitical stuff, we talk about news, we do, like, there's so much stuff we talk. We have diversified the brand from just Hood and Palantir, which it was for I would say, better part of 3 years as I was building the brand, to talk about a lot of other topics. And I've worked very hard to prove that there is valuable content and insight that I can provide to other topics. And if I can't, like, I don't know what the hell was happening with Broadcom on Friday. We called up Jose. We're like, bro, what the hell is this ASIC GPU nonsense? And he actually explained it in a real, like, easy way that even I can understand, and I can re-explain it now. And so I'm like, I think we've done a good job diversifying the brand. But a lot of people, because of the success of Hood and Palantir, which it's not my fault that both of the companies are executing at a level that we have not seen on Wall Street. Both of them going from 7 to the hundreds. Palantir just putting up $1 billion revenue, growing 48%, the fastest in software, the fastest in AI. Robinhood, obviously, completely dominating financial services. Like, so what? Do we just not cover that? Do we not talk about the monumental occasion? Do we not have Carp on the live stream? Do we not talk about Robinhood being in the S&P? Like, no. When that stuff happens, you talk about it. I don't want to obsess about it, because that's not the time and place for that. And you have to eventually move on. And there's a way to do this with grace, is what I'm trying to say. And just what I've seen from a lot of this open door community and, just a lot of these people that are inside there's very little grace, and there's more so just, hey, let's just pump it up, do what we got to do to keep pumping it up. And let's keep tagging Amit so that his audience can get exposure to Open Door, when the majority of you don't give a shit about Open Door, don't care about Open Door, don't want to hear from Eric Jackson, who has proclaimed that he is, like, God put him on this earth to get Open Door to 82. And as a result, I don't want to talk to him either. So it is what it is. I hope it goes up. Like my life does not change if Open Door goes to 82. I will not feel the FOMO of a missed opportunity. I really won't. I've done well over the past couple of years. I want to protect that money, not diversify into something that I think is very speculative. And the fact that they need my validation, like, at the end of the day, I'm just a regular guy. Like, my validation is not going to get Open Door to the moon. And quite frankly, if you need another FinTwit creator's validation to get the stock to go to the moon, then I think there's a lot of insecurity in the community about the fundamental thesis about that stock. I think that's the issue. I mean, the fact that they need me to, like, interview this guy, I'm like, are you so insecure about the fundamentals of the company that you need a guy who has a show on YouTube that, yes, the show has grown, but so you need that show to validate the thesis by having that other guy on the show? Like, I just think most people in the community shouldn't give a shit about me or my opinion about the stock. And I'm not shorting it. I don't have puts on it. I'm not obsessively tweeting about it. I've, like, quite frankly, never tweeted about Open Door other than saying, hey, the CEO not selling stock, or the insiders canceling their executive compensation plan for selling shares. I was like, that's bullish. I think that's, and I said that at 450, stocks at 7. I'm like, okay, cool. That's bullish. That's not going to get me to buy shares. But so my plan with this going forward is to just ignore it. And it ties into the broader conversation of just ignoring a lot of the hate, because goodness gracious, was there a lot of hate this weekend? Like, a lot. The last thing I'll say, there's a lot of hate this. I'm just, like, seeing these random accounts under 1,000 followers just tweeting all this stuff about me. And I'm like, okay, do you hate me? Do you hate my personality? Do you hate my jokes? Or do you hate Hood and Palantir? And do you hate, I think what really, and this is the last thing I'll say, I think the conclusion I've come to is most of these accounts are anonymous profile pictures. Most of these accounts, quite frankly, are selling a Discord and subscription. And I don't think they have an audience to sell that Discord and subscription to. So they, like, need to create some toxic type of post that can screenshot something I said and be like, hey, look, this, that, Amit's an idiot, blah, 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 blah. And that use that virality off my name and them saying something toxic to then create a perception of their account being legitimate, which then drives all the people to go to their profile and then potentially click on their Discord to pay them $55 a month. And at some point I realized, so this is just a hustle for them to get paid. And if that's the case, then that's the case. If they need to use my name to get paid, then that's fine. But I can't engage in that. So I think one thing that a lot of these accounts have realized is it's really hard to build a genuine audience. It's really hard to do a meetup in Miami where 300 people come across the entire world and actually want to, like, engage with each other. It's really hard to be sitting next to the CEO of a $350 billion company because he values the input and the analysis that you put into analyzing his company. And it's really hard to get two companies take 2.5 years from their analysis, go back to back into the S&P 500. And there's a lot of hate that comes with realizing that a lot of those accounts probably don't have the energy, capacity, or, quite frankly, authenticity to be able to execute on their first 5 years of being a content creator like that. And so it comes down to jealousy and hatred. And as a result, I'm like, all right, do what you got to do. I'll take the shots. And it is what it is. So those are my thoughts. And I don't want to talk about this anymore. And I really, but I see all the posts that you guys are seeing. And at this point, I'm just going to mute these people. And eventually, I think the best way to get people to stop talking about you is to not show them that you care that they're talking about you. Do I care a little bit? Of course, I'm a human being. And it's definitely a new thing for me as the brand has grown this year. I mean, I had 120,000 followers in December of 2024. We are at 240,000. We did all of last year's growth in the first 9 months of 2025. There's been more growth, and with more growth comes more eyeballs. With more eyeballs comes a lot of people that, quite frankly, cannot stand what you're doing and how you built your brand. And I think the reason they really hate me is because I haven't done it in a scammy way. They're trying to find the way that Amit, like, maneuvered his way into scamming. It's like, well, there isn't anything. And so they can't find anything like that. So they attack Hood, Palantir. They find some way. Like, one guy was just like, I hate his glasses. I'm like, okay, like, that's fine. Like, you can hate my glasses. We maybe have a different vision for how we think about the world, which is why I wear these glasses and you wear those glasses. That was good. That was off the dome, but it is what it is. So yeah, I'm moving on. Got to move on with life. It is what it is. I appreciate all the support from people in the chat. I'm sorry I went on this 10-minute rant, but I had to address this at some point because I just saw a lot of this hate over the weekend. I'm sure you guys saw this hate as well. But then you ask yourself, why are they hating on you? Like, what is the reason? And it's not that much. I mean, it's like 3 or 4 accounts that are like spamming me with whatever stuff. And they're looking for a response. And you realize if you don't give them a response, it's going to be hard for them to keep doing it. Number 2, it's like they hate Hood, they hate Palantir, they hate the authenticity of what you've built with an audience. They can't replicate that. And as a result, they hate you. And so I double down on the people that care about me, the people that actually support, and the people that get value from this. And that's what we're gonna keep doing. So there it is. Appreciate all you guys. Means a lot. Let's get into a lot of this macro analysis, but I'm happy Desi, thank you for the super chat. Desi, your question got that off my chest. So I appreciate that question so we could get this out of the way. Thank you for the super chat. Desi was at the Miami meetup, and she was the person who gave me that beautiful bowl that you guys see in the background of my studio. So appreciate you, Desi. And thank you for being here. V-Rod, thanks for the $10 super chat. God bless you, brother. I even played the clip to my wife and son where you openly showed how you don't monetize your channel. Love it. Authenticity and integrity. Means a lot, bro. Thank you for being here as well. Davin, thank you for the $10 super chat. How can anyone hate you amid it's just a real life High School Musical? They just want to be you. I did respond. So maybe this is where the hate comes from. Someone said, what are the top 5 movies that I need to watch? And I included Interstellar, Wolf of Wall Street, Dark Knight, Inception, and High School Musical. And let's just say that tweet got a little bit of attention. And I guess you had some people that, weren't happy with the 5th ranking of that tweet. So it is what it is. Maybe that's where some of the hate comes from, but that's also where my authenticity comes from, because I genuinely do believe High School Musical should be, one of the movies that's up there. So I appreciate it, guys. It means a lot. I don't want to talk about this in the future. I really don't want to pay enough attention to this. Again, my skin is thick. My skin is very, very thick. Like, my skin is so thick that if you saw it at a club, you would ask for its number. So I am, one thing I realized this weekend is, like, although I saw some of those comments and it was like a little like affected me. I woke up today and I was just like, bro, like, I don't give a fuck about these people. I really don't. Like, my trajectory, the way I'm thinking about my career, my life, my community, the people that I care about, like, that is so much greater than a few anonymous accounts trying to sell their subscriptions and using me to create some type of toxic personality. So yeah, it's just one of those things as you get, and I'm thinking about my life. I mean, imagine Elon Musk and Zuckerberg and like all these very, very, very larger than life personalities, the amount of shit they have to deal with not just like some random Twitter account tweeting about them. Think about the Wall Street Journal, which actually has a lot of influence, putting out hit pieces on Elon and the shit. Like, he has to deal with the fact that there's a whole part of the media that just hates this guy. Like, so what I'm dealing with is absolutely inconsequential and peanuts compared to them. And as a result, you just got to move forward and keep it going from there. So there you go. All right, macro. Let's get into it. I'm sorry for the rant. Appreciate anyone who stuck around for that, but had to get that off the chest, and we can move forward from there. Deeply, deeply appreciate all you guys being part of the community and actually having a non-toxic relationship with content, because A, you get value out of it, but B, because we all care about each other at the end of the day. And I think that's what matters more than a lot of the other stuff that you may see online. Some of these comments are rant deactivated. Dude, we need this rant intro. I need to figure this shit out. Someone says say peanuts 3 times. All right, we'll move on. All right, so here we go. Ethereum. Let's talk about that. This was really bullish news, bro. Fidelity has launched FDIT, a tokenized share of the Fidelity Treasury Digital Fund. $200 million worth of Fidelity tokenized treasuries is already on this blockchain via Ethereum. So what does this mean for ETH? What does this mean for BMNR? I think it's inconsequential in terms of the price action for BMNR or ETH like tomorrow. What matters is Fidelity is a very large financial institution. And for Fidelity to say we are now going to tokenize treasuries, which, by the way, we've been thinking about the tokenization of the dollar, tokenization of US treasuries. A lot of this stuff is going to get onto the balance sheet. This is a real world asset, RWA, that is being tokenized via Fidelity. BlackRock's going to do it. JP Morgan's going to do it. Goldman Sachs is going to. All of these multi-trillion with a T asset managers are going to launch these types of products because of the value of what Tom Lee has been talking about, which is tokenizing Wall Street. And as a result of the tokenization of Wall Street, I think that's going to create a lot of momentum for Ethereum. So this was like pretty important stuff over the weekend, because at the end of the day, the more assets that get tokenized, and real assets, not like, not like a picture of a rock, right? There was actually a post that went viral over Twitter over someone who bought a Bored Ape for $450,000. He sold it yesterday for $37,000. And the tweet was just like, hey, I lost $400,000 because I thought this NFT had value in it. We are not in that part of the cycle. I don't know if we ever get to that part of the cycle again. I mean, that was just crazy euphoria, people paying $400,000 for a picture of a monkey. But we're, tokenizing treasuries is not tokenizing monkeys or tokenizing pictures of rocks or monkeys or whatever it may be, right? Like, this is real stuff that real institutions are going to be buying, that real people are going to be buying, that real companies that are pegging any level of assets they have to treasuries are also going to be buying. And so as a result, I think regardless of the price action on Ethereum or Bitmine, do you believe in the value of that network and of that blockchain? If you do, I think Ethereum is going to be a big winner. And I think being leveraged to that is not going to be the worst thing in the world, which is why I'm heavy in Bitmine. I've started buying more. I bought some more on Friday at 40.70, I think. And I continue to believe it's one of the most important macro trades. And I'm just repeating what Tom Lee is saying. But as I've started to try to validate his thesis, which is not complicated, tokenization, stablecoins. That's it. You put those two together, the majority of that happening on Ethereum. By the way, last week, Ethereum's stablecoin supply was 150 billion. This week, it's up another 20 billion. It is now 172.2 billion. I think follow the value, follow the money, follow how people are developing and building on it, and eventually the prices will follow as well. And the covered call premiums are exceptional on Bitmine. So, I mean, I haven't found a stock where the covered call premiums are just incredible, which means there's some volatility. But the volatility is something you can kind of navigate because there is a premium to NAV that theoretically should not be approached like SBET, right? Or like dissipated. And so it would be a good thing if that continues to stay up. And that's not a guarantee. It did actually go below its NAV on Friday. I think it got to like 39.70, but bounced back immediately as the market started rebounding because that's kind of the price where at least there's somewhat of a floor. And then B, the upside to Ethereum, given the Genius Act and all the stuff that we have over the next 4 years, just seems monumental. So as a result of that, it's hard to be that bearish on it. And I think we're going to see a lot more momentum going into the end of the year for Ethereum. So that's what we got on Bitmine. Having said that, here's the next piece of news that transitions into Tom Lee. I'm very curious what people are going to think about this. I'm going to make a poll right here in the chat. I saw this. I didn't know how to feel. And as much as I'm excited about it, I also am a little worried, to give my honest opinion. So let's ask the question right here. Let me make this poll. Question is bullish or bearish? Here is the piece of news. Some of you guys might have not heard this before, so here you go. This is the first time you're going to be hearing it. Tom Lee is launching a SPAC. Tom Lee is launching a SPAC. Poll is in the chat, bullish or bearish. The SPAC is $250 million. It is underwritten by Cantor Fitzgerald, blank check. Cantor Fitzgerald is also the underwriter of the 24 billion ATM that's on Bitmine. And the company is targeting a merger with a private firm in AI, digital assets, fintech, robotics, and communication. Okay. So my question is this bullish or bearish? Now, I'll give both sides. The reason I think it's immediately bearish is because it's like SPACs, right? SPACs are back. SPACs, for those that don't know, special purpose acquisition company, it's just another way for a company to merge with someone who is the lead sponsor of the SPAC. So if you have a company and then Tom Lee has this $250 million that's already raised because he has these institutional investors set up because he's raised that money, he will say, hey, you merge your company with my company, we'll take it public, and now your AI company is public, trading under whatever ticker it's trading under, and people can trade it. And usually they start off at $10 a share, and if the company is actually valuable, it should be a regular public company that gets the benefit of the liquidity of the public markets. They can put up good earnings. Their stock probably goes up over time. The bearish nature comes from the guy who led the revolution of SPACs, which was Chamath back in 2021. And that's why it has a dirty taste in everyone's mouth. However, and this is where I'll hedge with some bullishness to the bearishness, the person who was leading the SPAC, Chamath, I trust a lot less than the person who is potentially leading a new string of SPACs, aka Tom Lee. So the question becomes, does Tom Lee have the insight to be able to find a company that's worth $250 million and bring it to retail? Because eventually it's going to be marketed to retail, right? Like that's how these SPACs mainly get their liquidity. And will they be a company that can actually put up earnings growth and actually like thrive? Or is this some shitty company that Tom Lee's going to make like 10 million off of the sponsorship and like he's doing it for his personal gain, which is what Chamath did back in 2021. And all these companies are going to go to zero in, a little bit of a more bearish environment versus a bull market. That is the question. That is the question. By the way, Bills just did a touchdown. So There you go. Thank you, Robert, for that. I did call you a robot. Thank you, Robert, for that update. So my perspective is I reserve the right to judge. 55% of you say bullish, 43% say bearish. I really do love Tom Lee. I trust his insight. It's why I've invested in BitMine over SBET. Is there enough liquidity in the overall market, which is what's leading to these SPACs emerging again? Yes. Does that mean that Tom Lee's going to get a shitty company like Virgin Galactic to go public? I don't think so. Now, maybe I'm wrong. One big piece of bearishness I will say that has nothing to do more so with the SPAC, but more so has to do with Tom Lee himself is he's doing a lot of shit, guys. He's running Fundstrat. He's running BitMine. He's doing a podcast every single day. Now he wants to put the SPAC on his plate. He has Granny Shots, which is also like a $2 billion ETF, and that he has to manage as well. Don't ever say did a touchdown ever again. How do you say what scored a touchdown? Did a touchdown is not that crazy, bro. He did a touchdown. Like that's not, if you say it real fast, it sounds kind of normal. Probably should have said scored a touchdown, but whatever. At least I didn't say he put the ball in the net or whatever. But I think he has a lot on his plate, bro. A lot on his plate. And so not saying he can't manage it. He has a bed in his studio. I'm just saying as like an objective third party, I'm like, that's a lot. That's doing a lot. And that's managing a lot. And hopefully it's not like, undercutting his attention on the stuff that matters, which I think the most important stuff that matters is his macro commentary. And if his macro commentary starts to not be as pristine, obviously that's what people know him for. Like, that's not the best thing in the world. So whether he's bullish or bearish, right? Like at the end of the day, that is what people know him for. So these ancillary products he's offering on top of his brand, I think makes sense. Eventually you got to monetize, but I just hope it's not so much on his plate that at the end of the day, he's a human being, right? So those are my thoughts on the SPAC. I have no idea what's going to play out. I don't know when it's going to go public, what company they're going to target. Hopefully they target a really good company and it's a company that deserves to, go public, but we're going to see how that ends up playing out. Concluded a touchdown. Exactly. What is the score? Bills 7-0. Okay. 7-0. There you go. Finalize the touchdown. All right, cool. So that's what we got on Tom Lee. Also, Tom Lee's going to be on CNBC tomorrow, so we'll probably talk more about some of this stuff. And I think Saylor's going to be on CNBC, so we'll get to hear what they say. Okay, so the next update. Take a look at this. Found this chart over the weekend. Again, for all the people screaming we're in a bubble, we looked at something similar last week, but take a look at this. This was kind of a new updated version. These are the current multiples, next 12 months PE versus December 1999. 41x was the median for Microsoft, Cisco, Intel, Lucent, IBM, Time Warner, AT&T, Oracle, the most important companies in the world at the time. The current for the companies right now that are producing way more cash flow, way more revenue, way more net income, way more overall growth, NVIDIA, Microsoft, Apple, Amazon, Broadcom, Tesla, Visa, Netflix, is at 31 times. We're not in euphoria yet. I don't think we're in euphoria yet. I know it feels like there's certain forms of euphoria, but again, those are pockets of the market that I don't think can be compared to 2021 or 1999. Like when the most important company in the world, Microsoft in 1999, is in a bubble, that's a different thing from NVIDIA trading at 30 times versus 69 times Microsoft December 1999. I mean, NVIDIA is the most under-owned Mag 7 out of all the 13Fs that Morgan Stanley analyzed last quarter. Like you cannot tell me that's screaming euphoria, even at a $4 trillion market cap, because again, they are growing enough to justify, in my opinion, that $4 trillion market cap. And I think they will continue to put up that growth. Again, if they do $8 of EPS next year, they're trading at 27 times. That's cheap. That's freaking cheap. Especially, no, it's probably trading at like 23 times now, given it fell from 180 to 165 over the past couple of weeks. So I don't think we're in euphoria. I don't think we're in a bubble. Tesla right here, 354, hoodie, 109.72. I think if we do get up in that situation, you would see NVIDIA at like 300 right now. You wouldn't see it at 167. You wouldn't see the amount of bearishness you're seeing, whether it's on Twitter or on CNBC by all these analysts saying like, we have to take a break, things have to go down. But whatever bear argument they're coming up with, just September in general is bear. Like there is enough wall of worry, in my opinion. And Tom Lee talks about this all the time. All the institutional analysts he talks to screaming that like, we cannot be bullish. This is the time to sell. And you kind of need that to get to the next leg of the bull market. So I just don't think it's euphoria yet. I would have to see a material slowing down of earnings growth for that to happen. And right now, we're just not seeing that as the case. Speaking of earnings growth, Mr. Scott Bessent believes that the next decade of earnings growth is going to be some of the most amazing stuff, and it's going to start in the first quarter of next year.
And I think there's a very good chance with this AI boom that we're seeing, we're going to see the productivity kick in as soon as the first quarter of next year. So I think everyone who's setting policy at the Fed, whether it's the board, the regional bank presidents, the staff, should have a bit of an open mind here.
Well, that's a great point.
Now, the exciting part about this is when Bassent's saying we're going to see this growth, I mean, it got kind of validated this weekend by the clip that I showed on Friday about Mr. Zuckerberg. Now, we have an update on that clip. Real quick, I just want to replay the clip for those that missed it. It was about how much Zuckerberg is getting ready to spend in the United States over the next 5 years. And Zuckerberg clarified some of his comments based on all that AI spending.
Well, thanks for hosting us. And this is quite a group to get together. And, I think, all of the companies here are making huge investments in the country in order to build out data centers and infrastructure to power the next wave of innovation. So it's, we don't often get together as the CEOs of the different companies, but it's good to see everyone.
How much are you spending, would you say, over the next few years?
Oh, gosh. I think it's probably going to be something like, at least $600 billion through 28 in the U.S. Yeah.
It's a lot.
No, it's significant.
That's a lot. Thank you, Mark. It's great to have you.
Thank you.
Okay. So good moment, right? 600 billion. Then Zuck gets caught on a hot mic, and it's reported he said, let me pull this up right here. I wasn't ready for our announcement. I wasn't sure what number you wanted to go with. Okay, that's the hot mic that caught what Zuck said after he said the 600 billion. So obviously he knew that question was going to come and he had an answer prepared for it. However, Zuckerberg responds and says, if AI progress keeps accelerating, it's quite possible we'll invest even more than this. I had briefed the president that we're planning to invest $600 billion in the U.S. through 2028 and a significantly higher number through the end of the decade. I wasn't sure which number he was asking about, so I just shared the lower number through 2028 and clarified with him afterwards. Zuckerberg obviously wanting to be more conservative than, aggressive, which is the right thing to do as a public CEO. And he said, it could have been higher than 600 billion, but given he didn't know exactly what number that Trump was talking about, he went with the lower number. So to me, I think this is a non-story. Like at the end of the day, it's a public meeting of the most important CEOs in the country and the president. Obviously, they're going to brief about what they're going to talk about to the media. And yeah, Trump said, hey, I want to know how much you're going to be spending. Obviously, my economy looks really good. If you guys are spending a lot of money, you guys should tell the American people how much money you're spending. I don't think there's like some conspiracy theory between them. Also, Zuck is a public CEO. When he says a number, every investor pays attention to that. So he can't just lie about the number. So it was a nothing burger. However, remember when Jensen said on the earnings call that by the end of 2030, $3 to $4 trillion will be spending CapEx? Overall, a majority of that probably happening by the Max 7s. Zuckerberg just said by the end of 2028, not even 2030, they're going to do $600 billion. And then he clarifies that number potentially could be bigger by the end of the decade. So what if it's like $800 billion or $650 billion or whatever it is by the end of 2030? I mean, that's like a decent chunk of that $4 trillion already being done, which is the number that Jensen has predicted, which a lot of people didn't believe Jensen on that number. Zuckerberg is committing to almost 20% of that, and he's being conservative with that 20% commitment. So the people screaming bubble on NVIDIA, I mean, again, like you're either not believing that Zuckerberg, Sundar, all these guys are actually going to spend the type of money. And I don't know why you wouldn't believe them because they've continued to spend as much money as possible. I mean, Anthropic raised $13 billion at $183 billion valuation. One thing that was revealed over the weekend, they had to take 1.5 out of the 13 billion that they raised and pay authors of books because apparently their models were trained on a ton of books in history. There's a Verge article about it. And Anthropic confirmed that 1.5 billion out of the 13 billion they raised, which is not a small amount of money, they had to pay in settlements to all of the writers of those books to make sure that Claude and Anthropic can continue using the content that they trained their models on. The fact that they raised 13 billion and they were like, 1 billion, 1.5, we're just going to give it away to the content creators. It's not even going to go into GPUs, infrastructure, data center build. It's going to the content to train the models. means they must think that 1.5 billion is a parking ticket to overall do what they need to do in terms of building out the actual ecosystem that they need to build out to make sure their models are more useful and to keep growing at the 500% revenue growth rate that they're growing only in the past 8 months, not even in the past 12 months. They had $1 billion in January. They're at $5 billion by the end of September or by the end of August. So when we think about that level of growth, that level of multiple expansion, that level of commitment to spending in the United States, it is hard for me to say, unless we have a crazy recession where all this CapEx spending will stop real quick, because at the end of the day, shareholders are going to be like, hey, you got to protect our profits. You can't just be spent, if we have like some 2022 type event or 2008 type event, unless we have any of those scenarios, I think the party continues and the money continues to get spent. And now I will say it kind of was bearish meta because like, bro, he's about to spend a lot of money on CapEx, but obviously, so it might hurt their margins. But if you're a Meta shareholder and you've been in the stock for a couple of years, I mean, like you probably want this thing to come back down to 500 because you would scoop up a lot more, especially if you trust that Zucks can get an ROI on all that CapEx. Also, I mean, look, he's not an idiot. Sundar's not an idiot. Nadella's not an idiot. If they're spending hundreds of billions by the end of the decade to the tune of what Jensen thinks is 3 to 4 trillion, and maybe that's even conservative, then they're probably going to get an ROI on that. And as a result, I think that's going to be very exciting for the next decade. And I think that's obviously going to be very good for NVIDIA as well. So yeah, they're getting 20% ROIC by spending on data centers. So my cousin, who I got brunch with on Friday, she works at a tech company. And she told me, and some of you software engineers might be resonating with this, her company has bought a subscription to Claude Sonnet, like the Claude Sonnet model from Anthropic. And it is so good. Like it is so freaking good that she is only allowed 500 queries a month because each query that she puts in is really expensive because the output she gets is really good. And it is basically now a requirement that she understand how to use those 500 queries every month productively, because if she messes up on it, she's wasting a lot of money for the company, and that would, not be productive from an efficiency perspective. But also that company would have to spend a lot more on more Anthropic tokens, and apparently Anthropic has the best model for coding and integrating code and understanding a company's code base, etc. And as a result, that is why, like, there was the firsthand anecdotal example that I got for why Anthropic is growing as high of a level that it's growing at. Now, one of the most important things she said is, and yeah, devs love Sonnet. I mean, apparently it's becoming the go-to. It's like better than ChatGPT code, Grok code, and she still uses that stuff, but her company is paying a hell of a lot of money for that Sonnet subscription. The main thing she said to me is her job is becoming less of a coder. It is becoming a prompt engineer. She needs to know, obviously she needs to be good at coding, but she needs to know exactly how to prompt the AI in a very like multifaceted way. Not just, hey, imagine you're an expert, blah, blah. It's like, no, you have to really be sophisticated. And like, for example, if the code's going to like fix some random bug, but you can fix that random bug yourself. You don't need the code to waste tokens to fix that random bug. You need to be able to tell the code how to ignore certain nuances of your code base so that it doesn't get caught up in doing something that like it doesn't need to waste tokens on. There's a lot of this prompt engineering that we are going to see increase the value of a software engineer to an enterprise over the next decade. And all of that is going to need more data centers and more GPUs. And it is now, she told me, like, there is no way in hell her company is going to go back from the Anthropic. If anything, they're just going to spend a lot more money on Claude Sonnet because it's making them more effective, making them more productive, and the employees can't live without it. So although it might lead to a less amount of jobs, potentially in the economy for software engineers, that's a whole different philosophical issue that we'll deal with that when we get to that. The level of productivity is going up, and the level of revenue that Anthropic's going to make is going to go up, which means the level of money they're going to have to spend on, you guessed it, GPUs, is probably going to go up as well. And so it's just hard for me to imagine that this story is ending anytime soon. It's also getting the cost of electricity to go up. So we have a whole different issue in this country around power and energy creation, and that's why a lot of the energy plays have been getting momentum. But very, 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 very important to not just classify NVIDIA as a bubble because it's down from 180 to 165. I mean, the amount of people that like, where this toxicity that is turned online towards some of these mega cap AI companies that, oh, the stock is down 10%, therefore it's a bubble. It's like, I just don't understand how people have come to these conclusions and what level, like what level of bias they were putting into their analysis. Because in what world does a stock dropping 10% means it's a bubble? It's like if it was down 50%, okay, I guess you have but down 10% into a seasonally weak period and we're screaming bubble. Like, to me, those are dip buys until we see evidence against the anecdotal and quantitative analysis that we're all seeing in front of us every single day. And so I just think it's not that serious to get scared about the bubble argument, given the data that we're seeing. 600 billion by Zucks, really? 600 freaking billion. I mean, this is insanity. It's craziness. And if he spends 600 billion, Amazon and Google are probably going to be, all right, we got to spend our money as well, as long as they get their ROI. And I think that's not going anywhere to a long time. So we're going to see how this ends up playing out. But yeah, a little bit of analysis right there on Nvidia, bullish Nvidia. I think it's a buy the dip. I think if it gets anywhere below 150, that's what gets me very excited. I don't know if it easily gets there, but we're going to have to see how that ends up playing out. Now, speaking of jobs, in regards to jobs potentially being taken away because of AI, we also have jobs being taken away just based on the weakness of the economy. Here is Scott Bessent this morning talking about that jobs report that we had on Friday. That was a bit ugly. We'll talk a little bit more about what that means going into this week. But here's how Bessent defended that jobs report.
Kevin Hassett told me in an interview the numbers look, quote, weak. And you just heard me say there that Moody's chief economist called this a jobs recession. I want to give you the opportunity to respond to Mark Zandi. Do you see this as a jobs recession?
Well, Kristen, when I was here with you in April, there was a panic because the stock market had gone down, and you remained pretty calm, but a lot of other mainstream media people were in a complete lather over the stock market performance. President Trump, they held the views on tariffs. He was proven right. We had the quickest stock market recovery in history. We're at new highs in August, and we're not going to do economic policy off of one number. We believe that good policies are in place that are going to create good, high-paying jobs for the American people. Two, let's look at the efficacy of this number. August is the noisiest month of the year. Typically, the highest revisions come in August. That's why it's important that we have good data. Austin Goolsbee, who's head of the Chicago Fed and probably the most partisan person at the Federal Reserve in leadership, came out and said, I don't know if these numbers were that weak. I don't know if I'm going to vote for a cut in September because it may have something to do with the immigration deportations. So this is why we need good data. Three, if in fact these numbers are true, it shows that President Trump was right about the Federal Reserve. They are too late. And because of the bad numbers, they likely would have been cutting in June. And if we believe the numbers, and four, I can tell you the one thing this administration is not going to do, and we are not going to let the Democrat media surrogates do, is during President Biden, President Harris's campaign, they told the American people, it's a vibe session. You don't understand how good you have it. President Trump was elected for change, and we are going to push through with the economic policies that are going to set the economy right.
So here's my question. Was that convincing to anybody? Basically, I don't even know what he said, to be honest. I really, he get 4 points. I don't understand what any of those points meant. All I heard was August is a noisy month. Now, and we'll get back to this interview in a second. The problem with what's going on right here, and we were talking about this on Friday as well, but this is a very nuanced thing that everyone needs to understand. The Trump administration has an ego problem, and that ego problem, and it's not just Trump, it's every administration when it comes to jobs, but Trump is just like a very hyperbolic ego problem around them being the administration that can say, we are producing a ton of jobs every month, right? Because more jobs, more people happy, all that good stuff. The problem is the only reason, and let me say this slowly, the only freaking reason J-POW is cutting, or will likely cut by 25 bips on September 17th, is because the labor market is weakening. Not because of inflation. CPI or PPI and PCE were horrible. CPI is decent, but we're at 3% inflation, basically. You can't really cut into 3% inflation, especially if your target's 2%, unless you change the target. They haven't said they're changing the target. If their target was 3.5%, okay, we're good. We're at 3%. Their target is 2%. We're at 3%, right? So logically, they need to justify to the American people why they're cutting. The labor market's the only argument. So it's a really hard nuance for the administration to kind of walk in terms of explaining to the media that, oh, the jobs data is just like noise or it's fake or whatever argument that Basent is claiming, when in reality, the best thing that could happen for this administration is that we have a bad labor market. Now, let me nuance that by saying not a horrendous labor market, because you can't have, a really, first of all, you never want people to lose their jobs. But number two is you can't have a catastrophic labor market to the point where so many people are losing their jobs that the economy is crashing. You need a nuance where there is weakness in the labor market to force Powell to cut so that we can refinance the 11 trillion of debt that we have to finance, which we don't want to do at 4% or 4.5%. By the way, that 10-year came down like a rock on Friday. That was one of the best things to see. This thing got to 4.095. Last time we had this thing was back in April. So it is working in terms of the labor market not being the best for the Fed to cut. But you have to be able to explain to the American people the labor market is not in a horrendous situation, while also claiming to Jay Powell that it could become a horrendous situation if he doesn't cut. And that is the nuance, which I actually think is okay. We can all admit, and anecdotally, you can put in the chat. I mean, a lot of you guys have said in the chat for the past couple months that, hey, we are looking at our friends, our neighbors, our local restaurants nearby. It is not a healthy labor market. And I believe a lot of you guys that have, I've seen hundreds of comments over the past 5 months saying labor market's not good. For the past, let's call it January to June, or January to May, we were getting positive, 200,000 jobs, 300,000 jobs every single month. June, we got the revision, negative 250. Once we got negative 250, it was ugly, right? And a lot of the anecdotal stuff that you guys have been saying in the chat was validated by the jobs revision. Trump doesn't want to hear negative 250. So Trump says, oh, it's fake. In reality, let's say it's not fake. The fact that it's not fake is the only reason Jay Powell's thinking of cutting. And Trump says he's too late. Trump says he should be cutting for whatever reason, which, look, he's probably right about that. But at the end of the day, the Fed needs a reason, and the labor market is the reason. But Trump hates that the labor market is not doing that well. So now they're just making up this hodgepodge of analysis, which is what Basent just said for the past couple minutes, which is, August is noisy. So what is the takeaway from this? The takeaway from this is, I think the best route over the next 5 months is labor market is bad, but it's not horrendous. Jay Powell cuts dramatically, which will be good for equities. Also will be good to make sure the labor market doesn't become horrendous. And then you get into a steady state over the next 7 to 8 months of good job growth, not crazy job growth, but not negative job growth. Now, the problem that happened on Friday that I just didn't catch that data, June was revised to negative 13,000 jobs, even though we added 22,000 in August. So that negative revision means that, okay, what if August is revised to negative 20,000 jobs? And then what if September jobs report that we get at the end of, or the early October, ends up being negative 50,000? Like, if you start to see negative jobs growth every single month, that is the worst case scenario. Because although it would dramatically cut rates, if people don't have jobs, it doesn't matter if rates come down. So I liked the job report on Friday because instead of adding 75,000, we added 22,000. That's not negative, which is horrendous. But that's also not massively above 75,000 to the point where everyone would be like, well, why do we have to cut if we're adding hundreds of thousands of jobs every single month? And so this is the one thing I cannot say I'm certain about. I think I'm pretty certain that AI is not a bubble. I think I'm pretty certain that earnings growth is going to be strong. What I am not certain about is what I've been talking for the last little 7-minute soliloquy that I went on about how do we nuance the jobs report? How do we nuance the inflation expectations with the jobs report? How do we nuance the Trump administration's potential, hiding of the data if they don't like what they see in September based on this new BLS commissioner? How do we nuance all of that to get to a bull market by the end of the year while not having an economy that's tanking? And I think the only way is earnings growth is strong, inflation is stable, labor market is weak, but not too weak, and corporate earnings based on deregulation is enough to kind of culminate into a bull market, along with AI leading to more deflation. But ironically, AI will also lead to more jobs being lost. So there's a lot of stuff with the labor market that I don't fully understand. I'm going to be doing a lot more research to try to come to a better conclusion about it. But I don't think Basent understands it either, because I don't know what the hell he just said when he said August was noisy. It's like, that's not a response to what's going on in the labor market. And so I think everyone is trying to figure that out.
I believe by the fourth quarter, we're going to see a substantial acceleration.
Okay, well, we'll have you back definitely to check back in with you then. But let me drill down a little bit more on these numbers, Mr. Secretary. The president said that these tariffs are going to spark a manufacturing renaissance, he called it. But since he announced them in April, the U.S. has actually lost 42,000 manufacturing jobs. Are these numbers proof that the tariffs are failing to produce the the manufacturing jobs that President Trump promised?
Again, Kristen, it's been a couple of months, and with the manufacturing sector, as you know, we can't snap our fingers and have factories built. So what we are seeing is a record amount of investment intentions. We've seen a capex boom in the first half of the year, and I think that was actually held back. The One Big Beautiful Bill, which has full expensing for factories and equipment, was passed on July 4th. Many companies were holding back then. So we are going to see construction jobs and we're going to see manufacturing jobs.
But Mr. Secretary, the economy did add nearly 500,000 manufacturing jobs under former President Biden. In this case, since April, again, you're actually losing manufacturing jobs. Is that problematic for your policy?
Well, a couple of things, Chris. We're going to get the revisions for last year next week, and there may be as big as an 800,000 job downward revision. Again, this would be the second downward revision. So I'm not sure what these people who collect the data have been doing. It's good. We need good data. Secondly, what we are seeing is the jobs that are being created are going to either native-born or legal Americans. Most of the jobs created under the Biden administration, they went to illegal aliens.
Well,
I'll link it for anyone who wants to watch it. But look, I just don't think we're getting a proper response or an answer on how we're navigating the job market. And I don't even blame Basent. I don't think he fully understands how to give a concrete answer. Other than saying like the methodology of the calculation of jobs is rigged, which I actually agree with him. I think it's like a horrible. I don't understand why we can't just use Palantir and completely revamp how we aggregate data for the BLS. But even if you were to fix it 1,000%, would we be in a healthy labor market? Like, I don't know. Like if you revamp the entire aggregation process of data, would we be adding 100,000 jobs a month? Would we be not revising 100,000? Like. He can't say that. I can't say that. Trump can't say that, even though, their entire argument is we need a better quality of how we aggregate the data, which they're correct on. But would that even fix the problem, which is a very nuanced problem? AI theoretically should deflate the cost of everything because it becomes more efficient, which technically means the labor part of that cost of creating an iPhone case or a software engineer coding up a new product for a company also gets taken out, which is a large portion of the cost, especially in America, because we pay, high salaries to a lot of these people, which means those people lose their jobs. And if they lose their jobs, then, how do we nuance the nature of the earnings growth that we should expect from companies with people that don't have jobs versus the cost of goods going down? The only way we kind of circumvent all of that is AI actually increases the amount of jobs in society, which some people do believe in. By the way, touchdown for the Ravens. They hit it out of the park. And maybe that's the optimistic route to say that maybe it just increases jobs across the board. But I don't know. So this is something we're all going to have to follow and figure it out. Again, I obviously this does not mean it's the end of the bull market or anything like that. Corporate earnings is the only thing I think people should care about. All this other stuff that I'm talking about in macro, it is just noise at the end of the day. Now it can become more than noise. As of now, it's just noise. And as soon as it starts affecting earnings, then it's a lot more than noise. But I don't think it's affecting Q3. I don't think it's affecting Q4. We're going to have to see what happens in 2026. We'll figure out how to plan for that in November, December. But I think the next 3 months, we have a bull run coming, particularly led by rate cuts and by a labor market that is not decimated. And as long as it's not decimated, then I think we'll be in a decent shot. And yeah, unemployment is still only 4.3. I'm happy. Yes, Grundy, thank you for this comment. Unemployment is still way lower than the UK, Germany, Italy, Canada, and France. So it's not like we have some, unless the unemployment rate is wrong and we're being lied to. I don't know. But it went up from 4.2 to 4.3. It's like, okay, I don't think that's recession. It's really hard to have some massive cataclysmic recession with a 4.3% unemployment rate. So I think all of us have to pay attention to the labor market, but it doesn't seem like that's going to be the worst thing in the world over the next 3 months to see what ends up playing out. My wife is debating throwing my phone in the lake. I'm not trying to hurt you. I'm just trying to keep you from the thing that keeps you from connecting with me, which is a myth. Tom, sometimes, look, I believe in happy wife, happy life. Okay, I really do believe that. But sometimes it's like Sunday nights with the boys. You kind of got to just you got to tell her to get her own friends, dude. She's got to go out. You're with. Like, you're having your special moment. It is what it is. So I'm sorry to Tom's wife for doing what I have to do. You know, ironically, I have stolen a lot of men from a lot of women. Like, realistically, over the past 4 years, that's what I've done. It's quite incredible. It really is a skill set. And it doesn't help me beat the allegations. But it really is an incredible skill set. Yeah, I've become a homewrecker for many marriages. So I can understand the animosity from women, but it is what it is, dude. It's just how it plays out. All right. Speaking of equities and exposure to equities, especially if you don't have a job, obviously one of the things that I think I preach, Steve preaches, is you got to own equities. The United States households own equities. The allocation of households' mutual fund, pension funds, and foreign investors' allocation to U.S. equities is up to 55%. That is a 4 percentage point increase over the last 6 months. By comparison, the dot-com bubble was 51%. So we are now above the equity allocation in the United States or in United States equities across the world by above 4%. Obviously, the companies are doing a lot better than the dot-com bubble, so it would make sense. And as a result, investors now allocate just 13% of their financial assets to cash, near an all-time low. I think that's probably similar to a lot of you guys in the chat. Probably you guys in the chat are like 10% cash, maybe 20, 25% cash if you're really conservative. Most people are probably 10 to 15% cash right now. And allocation to debt instruments, such as bonds, fell to 17%, the lowest since the 1980s. The lowest since the 1980s makes sense. You know, the 1980s had a variety of different issues in regards to problems with U.S. debt. We're still having those issues, but companies are performing so well that people are saying, I'd rather own NVIDIA than the 10-year treasury bond. Now, having said that, I think a mistake that a lot of investors have been making every time they see a chart like this is they're like, top. Like, I feel like top is everyone's favorite word or something. Like every time they see anything, they're like top. Like, you cannot just scream, oh, that's a top, without analyzing the context and nuance of why you think it's a top. And either you can either say my explanation of that is coping, or you can actually like listen to the nuance. And the nuance is the companies that are growing at the rate they're growing at, 83% of companies in the S&P 500 beat earnings by an average of 7% over the past 90 days. You can either say that deserves a multiple, that deserves allocation from your portfolio outside of bonds or real estate or something more volatile like crypto into something like an Amazon, which is only up like 5% year to date, right? Or you can say, oh, that's a top. And if you want to say that's a top, all right, then that's a top. But like, I don't think it's crazy to see a lot of people say, I want to buy equities when equities are the things that are performing as well as they're performing. By the way, a lot of this equity exposure came because retail bought the dip in April and May, which has worked out in such a phenomenal way. I mean, it's quite incredible to see how retail investors saw through the apprentice guy saying that we were going to tariff Zimbabwe by 70% and said, no, I don't really believe it. And we're going to buy equities. And as a result, I don't think it's bearish. Like, I don't know why this has to be bearish. Companies, like, people want to own Amazon, NVIDIA, Google. Okay, let them. Google was at 150 for 9 months. It just broke out. And people are like, well, it's a top. It's like, really? Speaking of Google, by the way, one of the original founders of YouTube, the co-founder of YouTube, this is what he tweeted over the weekend. The full stack wave is coming. Google is going to be the most valuable company on earth within the next 2 years. Google is going to be the most valuable company on earth in the next 2 years, which I'm sure people will see this and say top because he's saying this. But let's do a poll on that. By the way, 65% of you are bullish on the Tom Lee SPAC versus bearish. Could Google be the most valuable company in the world in the next 2 years? Again, this is the co-founder of YouTube saying that they're going after the full stack and this could happen. I actually think it's possible. And the reason I think it's possible is because of TPUs. I think if there is a world where Google actually figures out, and I mean, they've already started to really figure out how they're selling and integrating TPUs into cloud, and that starts to kind of get rid of their necessity to be exposed to NVIDIA, which again, I think it's gonna be hard to like completely get rid of it, but it's probably gonna go down a bit. And going down will still be astronomical numbers, but which means NVIDIA will not grow 70%. NVIDIA will grow 30%, which, you know, I think is still the bull case for NVIDIA. But if Google can monetize search in an AI world, which is obviously a cash cow, they produce the most net income out of all the Max 7. Cloud ramps up faster than AWS and Azure. Obviously, you have Waymo, you have Apptronic, you have their moonshots, and then you have TPUs potentially allowing them to continue to sell into the enterprise when it comes to data centers. I mean, they just took a stake into TeraWulf, right? Like $3-4 billion company. Like these are pennies for Google to be able to spend to build out their infrastructure. And then potentially more use cases of AI that we're thinking about. Gemini as a personal assistant. I mean, there's probably a trillion other things that AI can eventually do when we're at like GPT-17 that we can't even think of right now, that if Google is in that race along with Meta and Amazon and OpenAI, they're probably going to take a piece of that market. And having a piece of that market, obviously, quantum, which is another moonshot. I mean, why couldn't they become the most valuable company in the world? Now that this whole DOJ court antitrust nonsense is done, I don't think it's crazy to say that. Now, obviously, they've got to catch up to NVIDIA, and NVIDIA's got to slow down while Google has to speed up. We'll see what happens. That's the exciting part of looking at a stock market and analyzing it. But is it crazy to say they could be the most valuable company in the world? I don't think so. Unless search completely falls off a cliff and everyone that was right about 10 blue links being commoditized by LLMs is right and the whole business model fails. But I think Google has been obviously proving there's a way for them to pivot. And search is still not dead yet, right? Grew 12% last quarter. So it doesn't seem like that has to go away anytime soon. 53% of you said yes, Google could become the most valuable company in the next 2 years. Okay, so let's ask a different poll right here. Let's do 4 options. Most valuable company in next 2 years. We're going to go NVIDIA, Google, Amazon, and we'll put Meta up there. Those 4. Actually, no, we'll do Microsoft. Actually, I got to replace Amazon with Apple. Apple's already at a head start. Even though, I don't know, I'll keep it. YouTube needs to give me more choices. I only have 4 choices, but those are my 4. Out of those 4, what would you guys have to pick on those? I didn't put Tesla there because I don't see the Tesla growth in the next 2 years. I see it in the next 10 years, not the next 2 years. However, speaking of Tesla, they did launch the Robotaxi app, and it is absolutely exploding on the App Store. I think you still have to get on a wait list. You don't get full exposure to the ability to obviously call a Robotaxi ride, but it's on the App Store now, which is good. I just don't think in the next 2 years the growth is exponential. Given, that's not me in my opinion, Elon said don't expect earnings growth until Q3 earliest of 2026, which means you got another 4 quarters of probably negative earnings growth. And at the end of the day, that's not good for Tesla. I'm trying to find the post where he talked. Yeah, there it is. Here's the post. So this was Tesla Robotaxi. It was number 1 2 days ago. Let me see that. Let me see if it's going higher. This is in travel. It's above Uber. It is not number 1 anymore. It is number 6. Uber, Lyft, Airbnb, Expedia, and Booking.com are the top 5, at least in the United States. Lamar Jackson scored a touchdown. Okay, cool. Shout out to Lamar Jackson. 16-7. Ravens Bills. All right. So yeah. I mean, look, bullish Tesla. I'm happy it's breaking out right here. I don't know, dude. I know I might be pissing off some people that are super, super bullish Tesla, but I'm just taking Elon's word and extrapolating it. He does not see Robotaxi or Optimus going exponential the next 2 years. So why would I think it's going exponential next 2 years? So I continue to believe in what I said when I bought Tesla before earnings at 335. It's an accumulation phase for the next couple of years. And I know a lot of bulls have been annoyed that it's been an accumulation phase for the past 5 years, but it is what it is. If you're going to get a CEO that wants $1 trillion in compensation for a $8.5 trillion market cap, then you believe in that vision and you accumulate. By the way, you know how one of the requirements of Tesla getting Elon to that $1 trillion compensation is 20 million Tesla vehicles delivered? CERN Basher found something that actually changes the typical definition of delivery. Tesla defines delivery as when a Tesla vehicle is placed into commercial operation for the first time by the company as a robotaxi. That changes everything. They don't have to sell 20 million cars. They just have to have enough of those cars turn into robotaxis at the end of the day, which will then ultimately become part of that deliveries. So I think that actually makes a lot of sense, and that kind of reduces the burden for them to literally sell that many cars, because that is a pretty high burden. But look, if you believe in that compensation package, then that compensation package hopefully should lead to a lot of momentum for Tesla long term. So that's what we got on Tesla. Zendez, thank you for the super chat. When is the Vegas meetup? We are likely not doing any meetups for the next couple of months. Again, I'm getting a lot of logistics planned out and working with some more companies in terms of like really planning a lot of this stuff. So I think the meetups will probably conclude or like begin again in 2026. I will be in Vegas this week for Robinhood, so if anyone's there, we'll be able to meet up at the event. But yeah, dude, I gotta get a lot of planning. Like Miami taught me how big these meetups are getting, and I just don't want to half-ass the effort anymore. Which, I mean, I've been half-assing the effort on the meetups because like I didn't expect that many people, and the meetups have done great this year. But like when you expect a lot more people, you have to invest in a lot more stuff to make sure the meetups are being done the right way. So I'd rather take my time. I for sure we're doing Singapore next year. I was actually on the phone with my uncle this weekend, and so we're getting ready for Singapore. But I have a lot of other cities in mind. Vegas is definitely one of them. LA is one of them. Chicago is one of them. I need a lot of planning to be done over the next 3 months to have a like legit plan of every month. What is the venue? What is the location? What is the structure by which people sign up? Like there's like a lot of shit I got to get done. I mean, dude, I planned the Miami meetup through a Google Sheet and it was hell. Trust me. It was freaking hell because you're like, it's just like, it was just not a productive way to plan a meetup for like what was more than 300 people at the end. So it's like, I really want to do it the right way. I think this year the meetups proved to me like there is demand for like meeting up in person. And now I got to make sure the logistics are executed in a way that actually takes them to the next level. And so probably starting January, we'll get back to the meetups. But it should be fun. Yes, we got to do Dallas. We got to do all those places in Texas, Houston. So and I already have a team, by the way. I have a team of 4 people set up. And like that's what I'm saying. I got to get, so dude, I have to be done with Vegas and get home and not travel for the next month. By the way, there was that international trip I told you guys about that might be happening in October. It might actually, I got some updates. It might actually be happening in October, which completely messes up October from a like schedule routine perspective, but it's such a good opportunity that I think it's worth messing it up. So it might not happen though. Like I got some more updates saying that it will happen, but like last minute, it might not happen. So I think I'll know in the next like week or two if it's definitely happening, but I need to come back from Vegas and then I want to reconvene with a lot of different projects I'm working on, especially the meetups team. And we'll get this shit ready going into 2026. So, well, yeah, I have not enjoyed the new apartment at all. I've barely been here, bro. Although I'm enjoying the studio, though. This is great, but the fact that they have stuff like this, I'm sure I should have thought of this a couple of days ago and just done the show in here while I was fixing up the studio in the upstairs apartment. But yeah, ultimately, we'll fix all that stuff up and we'll get ready for 2026. Okay, Grab. So let's talk about what happened with Grab. First of all, Anthony Tan again had a new podcast, very important podcast. I linked it. If you type in Grab CEO, you'll probably find it on YouTube. It's like 20, 30 minutes, and he's talking about all the benefits of just like how they built their business model, all that stuff. Here's what I saw by our boy Mike, who's been doing an incredible job following Grab. If you're not following Mike, you have to make sure you follow Mike on Twitter. This guy, he's done better due diligence on Grab than myself. Just like objectively speaking. And so I use his due diligence a lot to form my thesis, but he's really good with the news updates. I think he's in Southeast Asia, so he can really get the news easily, whereas, I'm not in Southeast Asia. But GoTo, the company that Grab was supposed to acquire, that they never ended up acquiring, the company that they raised $1.5 billion of cash. Now they have $7 billion in cash. A lot of us thought, okay, they're going to acquire their biggest rival in Indonesia. All of the founders were arrested on Friday. GoTo founders were all arrested, and the main one, based on current evidence from the Attorney General, is now in jail. Since May, Indonesian authorities have been investigating alleged corruption in the Education Ministry's procurement of 1.2 million Chromebook laptops, valued at about $784 million. The GoTo founders stole $800 million of laptops for poor kids in Indonesia that the Education Ministry of Indonesia gave them as a grant, and they put it in their own pockets. Yeah, go to jail, bro. So, I mean, why is this bullish? Well, Mike's analysis is scenario 1, Indonesia law permits the government to confiscate GoTo's entire business to recover their losses. By the way, GoTo doesn't make any money. So like $800 million of capital that they have to get back. I mean, you're talking about potentially nationalizing the business, right? Doing whatever you can do to seize the assets. Scenario 2, the business brand is damaged. It is only worsening from here, so it will die by itself, just a matter of time, which is bullish Grab, because then Grab takes that whole market. Again, Indonesia, largest market in Southeast Asia, 285 million people. So Grab's been growing it sequentially every quarter by like 2 to 3%. They're going to be a quarter where they grow it by like 35%. And that's when we see like 40 to 50% top line revenue growth. And that's when we're going to the moon. But we got to be able to get that growth from somewhere. And I think that might happen. I mean, we're already growing nicely without it, but like this could put fuel to the growth story. And then scenario 3, Indonesian people are now supporting Grab more. The sentiment in terms of the brand positioning is changing. So the government may ask Grab to handle go-to users, merchants, and drivers to avoid a spike in unemployment, which is very important, especially for a country that has an unemployment issue. It will be a message like when Uber sold Grab to back in 2018. Hey, we're moving to the Grab super app. So if you're a merchant, you're a driver, or you're a consumer, you can then go to Grab and get all your services from Grab versus GoTo. So, or the asset gets sold to Grab for little to nothing. I mean, this was something people thought, or at least Bloomberg, all the articles back in March thought they would pay $7 billion for. Ironically, Grab has like $7.5 billion in cash. So like the math made sense. But now this thing is worth not even $1 billion. This thing is worth nothing. So I know Grab's broken out a little bit from like 480 to 516. I continue to believe it is one of the best risk rewards in the market from a like cash on balance sheet versus growth argument. There's not a lot of companies that are trading at basically 30% cash and are growing upwards of 25% year over year. I think Q3 is going to be a banger for Grab. I think Q4 is going to be good. And again, the insiders are not selling. The institutions are only loading up. I know Grab is not going to the moon like Opendoor, and I'm not going in front of celebrities' houses begging them to buy a share of Grab. But I think the actual organic growth of Grab is going to lead to its momentum. And if you want to take a chance on Opendoor going from like $3 to $10, then you could do that. But if you want to invest in a fundamental business that maybe is dead for like the next year and you might be really pissed off, but you can at least know you're buying something where you can see the growth story, not see the hype, that is what Grab is. And if you don't want to be invested in that, then you don't invest in that. But like I continue to believe it's very obvious that this one ends up playing out. The question is just when. And again, no shade to the Opendoor people. I mean, look, if you bought it at 50 cents, it's $7, like you're up a lot of money. Like that's amazing. You're up a lot of money. I just have changed as an investor. I can't invest like that. I just can't. Unless I'm gambling, I cannot invest in like that. And so I would rather have dead money in Grab. I would rather have my money dead in Grab than be it in an asset that I don't understand. But I'm like I have a sizable position in Grab. We're talking 6 figures in Grab. I cannot sleep at night having that in something that is resting on, a community on Twitter consistently pumping the name for the stock to go up. Unless I was like a multi-millionaire and I'm like, oh, I could play around with these 6 figures inside of some random company. I can't do that. Got to be more conservative with capital. So that's what Grab represents to me. And sometimes you can. Agreed. Sometimes you can. It's been a good year, bro. Hoods up. Like we're back in the very, the portfolio is basically at all-time highs again based on this S&P pump, and we'll see if that lasts. But I just don't want to mess it up by taking a chance on something that already has 15x when Opendoor, and maybe it does another 15x. But like my point is just the reason I'm bringing this up is because I think of Grab as something that is not going to move like crazy, even though I think fair value is $8. But I also don't think your downside is anywhere near as volatile as some of the other names in the market. And as a result, that's why I continue to buy shares. So that is what I have. By the way, I'm going to be throwing in my entire solo 401k into Grab. I have not contributed anything, but for those that don't know what a solo 401k is, please, if you're an entrepreneur, you have an LLC, look it up. It is a massive tax advantage. You can write off don't quote me on this, but like I think it's estimated like $60,000 to $70,000 a year max. You can write off from your gross revenue inside of your LLC. And as an employer and an employee, if you're a single person LLC, you can contribute $23,000 this year, and then next year, based on your income, you can contribute up to $70,000 more. If I contribute the full amount, like $60,000, $70,000, all of that's going into Grab. Not Hood, not Nvidia, not Palantir. All of that is going into Grab because that's my solo 401k. I don't want to look at for like the next 5-10 years, and I want something that's going to grow. I want something that's really risk adjusted to me. And I think the trajectory now, are there some risks? Obviously, it's not the S&P 500. It's a lot more risky. There's an individual name. But I'm willing to take that risk in the retirement account and just let that run. And I'll probably trim, if it doubles or triples, and then just move that to the S&P. But I think at $5, like I am happy for the next 5 years to just dump my entire solo 401k into that. So, damn, Amit just turned into a CPA. Dude, I didn't turn into a CPA. I've been grokking all these different tax advantages because I'm looking at my bill going into next year, and I'm like, dude, how the hell do I reduce this freaking? Like, this shit is too much money. My uncle just sold a bunch of stock in Singapore last. He sold some shares, but a bunch of his hood got called away, and he made like $109,000 in profits. I think he sold at 109 for his covered calls. All tax free, all of it tax free, all of it. And so he's laughing. He's like, I'm mad I sold my shares on the stupid covered calls, but 109,000 not paying any tax. I'm like, dude, how can I move to Singapore? Like, it's just like, obviously I don't want to move to Singapore, but it's like, goodness gracious, bro. 109,000, no taxes. Like in America, 30-40% of that based on whatever bracket you're in is done, especially if it's short term. It's gone. Uncle Sam. It's over. And so it is quite incredible to be able to live in a state or a country that doesn't have to deal with that. I don't think America's ever going to get rid of the capital gains tax, but risk reward adjusted, I think Grab is not a horrible situation. And I believe in management. I believe in the founder. Like I really do believe in Anthony Tan. Maybe I'm wrong in the next 5 years, but hopefully I'll be right. Okay, cool. That's what we got. Dougie, shout out to Dougie Dullas, gifted 5 memberships. 5 of you guys just got memberships from Mr. Dougie. Thank you for the 5 gifted. We're going to get Dougie to the next Hood event. Hopefully he can make it to whatever next event that they have. But put in the chat if you're going to be in Vegas. I was talking to Doug this morning, and hopefully, a lot more people that are coming to this Hood event or people of the Hood community, not just like me, Tanner, and Roy, like a lot of you guys, even if you're not like content creators. And I think Hood's doing a good job reaching out to a lot more of those people. So hopefully we can get Doug out to another one of those. But if you're going to be there, I'll be there. I'll be happy to say hi and meet everybody. But it's really cool that they started inviting a lot more people. I'm in my Hood 108 covered calls were assigned on Friday due to the S&P inclusion after hours. What's the best way to get back in? Cash good puts or buy the stock back? It's a good question. I think it depends on if Hood's going to run. Like, is it going to 120 tomorrow? Are we really running, or is it going to be tame and kind of marinate? Guys, Hood was at 118 like a month ago. 109 is as exciting as it is, because we're finally like not in the low hundreds anymore, and we'll see what happens tomorrow, is still below its all-time high. So either we run all the way back up and it's a rocket ship and it's going further and it's going to stay in that like 115 to 120 range, or this gets sold off over the next couple of weeks. I really don't know. So I don't have a strategy here. I guess the best strategy is to give it a couple of days and see. And then if you want to be aggressive and sell some cash cure puts, so let's say it marinates at like 110, you sell some puts at 105, or you sell some puts at 109 and you get $4 a premium. So your cost basis is like 104. So technically it's maybe, you bought at 98 last week, you're buying $6 higher, but it's not that bad versus because you're not going to get 98 again. I think there's a lot of ways to navigate it, but I think you need to give it a couple of days to consolidate and see, is this a rocket ship that's heading to all-time highs, or is this going to chill out? My gut tells me it's going to chill out. I don't think we easily get to 120. I think I'm like, we should, because the S&P is enough for like that level of momentum to come in, but it's also September. And I think we got to wait for the rate cut. We got to wait until we kind of get through this seasonal period. So I think 120 end of year, I'm sticking to my price target. I think that's going to happen. I don't know if we get there next week and we stay there, especially if the macro is a little weak. My average was 35. Okay. One thing that's really important right here, and I did this for my mom and dad, is you can tell Hood if your Hood was sold on Hood, what tax lots you want them to sell. So my mom had shares that she bought literally at like 35. My dad had shares that he bought at 16, and they sold those shares. And so I messaged the support today and I said, hey, take the shares my dad bought at 100, not the shares he bought at 16. That'll save you on your taxes, obviously, because you don't have a massive capital gains. And B, you'll get to keep your low cost basis on your shares. So if you, and I don't think this is just on Hood, like IBKR, some of these other platforms, I'm not familiar with how they operate, but on Hood, and I wish there was an easier way to do this. I feel like when you sell a covered call, you should be able to select the tax lot automatically that should go away if your covered call gets assigned. It's really annoying to have to go through support. Yeah, you can do that on E-Trade as well. So I really wish Robinhood would like make that easier for people, but you can message support right now. You have until like, I think the end of a Sunday, and tell them, hey, this is exactly the lot that I want to be sold. And then they will like switch the lot that gets sold before the actual like trade gets assigned, which usually happens on Monday. For those on Fidelity Schwab, you are looking for tax lot selection or cost basis. Yeah. Fidelity lets you select on site. Yeah. Robinhood really needs to change that, because Robinhood needs to realize a lot more of their customers are selling options, which means a lot more of them will obviously have covered calls that get sold. And like it's because they do first in, first out. And it's like, well, if I bought Robinhood at $8, I don't want those shares to get taken away at 105. Like, take away the shares that I bought at 102. Right? Don't take away my $8 shares. So, you don't have to call support. You can just chat with an agent. When you get into their chat, just say agent. Some AI thing will say, well, tell me the problem. Just say, give me an agent. And then it'll connect you to a real person. And then, by the way, I got upgraded to concierge on Friday. And I guess the Hood S&P news was enough to get my portfolio to the point where like Vlad hops on the screen and he says, "Hey, you have a dedicated assistant now." So, or not assistant, but like a dedicated representative. So whenever I have like an actual issue, I can call up my boy Mark. I think Mark's his name, and we can fix some stuff. But yeah, we got that. But even if you don't have concierge, like for my mom and dad, it's really simple. You just message support. It's annoying because you have to go back and forth with them, but it's not the hardest thing in the world. Their AI agent is actually decent compared to a lot of others on sites. Yes, like I've asked them questions that don't have to do with a representative, and their AI agent is really good. Vlad also talked about their AI agent being pretty good in terms of support. So I will give them credit for that. But you know, when you're wanting to like figure out your covered calls assignment, like you just want to talk to a person and just get it over with. So that is one thing that hopefully they improve on. This was the moment where they talked about support. This was actually on the iced coffee hour where they were talking more about support and how Robinhood thinks about it philosophically.
We do that offering, and actually more and more people are in that category. So we're going to have to continue to scale that and make that better. And then for everyone else, we've been making huge investments in our AI customer support, where I actually think we're best in class. And we've been making lots and lots of innovations. And the goal would be to get the best customer support experience delivered to the mass market with AI. And eventually it won't just be chat and email, but you'll be able to call our AI. And, you know, some people actually don't like it.
Mm-hmm.
You know, they immediately, when they figure out they're dealing with an AI, they want human. But the AI is getting very good. And even now it'll probably, I think we should probably do a better job of the AI convincing people that it can be helpful. Just say, "Are you sure? I can really help you solve your problem." I think over time, the percentage of people that don't want to deal with AI, as they get confidence that it's actually going to solve your problem, is going to go down.
I think once you're
So look, I mean, they're definitely, and that helps their cost structure, right? Because if you don't have to pay for the call center, then that's really important. It's just with money, bro. People sometimes really want to talk to a human being. It's like, you know, it's especially if you have a lot of money on Hood, or even let's say you're not, you have like you still, that 50 grand matters. Now they can't give you a super dedicated representative just for that 50 grand. It's just not worth it for them economically. But in certain moments, I think they have to make it very easy for people to call or text support and get a human. But their AI is not bad. And so the more the AI gets better, the more the models get better, AKA the more GPUs and data centers we build out to get these models to be trained better, the better Robinhood's AI should be potentially at helping you figure out your covered call you know, like, and that means the person reviewing your covered calls might not have that much of a need anymore. Like this stuff has to get exponentially better, but it looks like Robinhood's embracing this stuff. And, you know, if they can continue to make it better, then obviously that would be good for Hoodie long term. It does help their margins. Yes, now I'm getting cash delivered to the new apartment. And that's what I'm doing. Okay, couple other headlines I wanted to talk about. We talked about a bunch of macro stuff. I don't think there's any other big stories I missed. Oh, CPI this week. I don't know what to expect for CPI. Real quick, before I talk about CPI, the OpenAI researchers, they put out a white paper this week, and they said they figured out why language models hallucinate. Now, that doesn't mean they fixed the hallucination problem, but as you can see, we are starting to see a lot more continual progress. It's almost like every month at this point of people, you know, very, very important researchers figuring out, hey, if we can solve this hallucination problem, and we've, you know, open sourced our research to everybody about why these models hallucinate, which, by the way, Vlad is trying to solve in his Harmonic startup as well. He has this like math LLM startup. They're trying to solve the hallucination problem in math, which is a really hard problem to solve when you're working with numbers. That's more progress on these models. So again, everyone's saying it's a bubble. It's like, well, there's more progress being made. The models are getting better. The models are going to keep getting better, which means there's going to continue to be a need on all this CapEx and data center build out. And once you get rid of hallucinations and the thing can actually book your ticket to Vegas by just telling the AI to book your ticket, and it doesn't hallucinate and think that you meant Utah when you said Vegas, right? Like these are really important things that eventually will get solved. And I don't think it's slowing down anytime soon. Now, in terms of CPI, Street's expecting, let me pull up the expectations right here. Oh, wow, the Japanese prime minister just resigned? What? Holy crap. The Nikkei is up. There was no BM&R news. There's no BM&R news.
For those asking, we covered BM&R early in the show, but there's no like specific news. The Nikkei, wow, it's up 2%. Ashiba, I think is his name. He resigned. Why did he resign? Not sure. CPI is on Thursday, if I'm not wrong. Let me confirm. Which I don't think I'll be able to cover because I don't think I'll be live on Thursday. I'll go through the schedule this week for the market open, market closes at the end in a second as well. No, it's actually on Wednesday. Wednesday, will I cover? Yes, I will cover it on Wednesday. Okay, I'll have to wake up early as hell. Hopefully Tanner wakes up with me. But okay, so Street's expecting. Wait, no, Wednesday is PPI. When the hell CPI? CPI is on Tuesday? CPI is. Dude, when is the CPI? Today is Sunday. Tomorrow's Monday. It's not tomorrow. Tuesday. It's not Tuesday. Why are they doing PPI before CPI? What the heck? Japan Prime Minister resigned due to not being able to get agreement on tariffs. Is that actually true? Don't they have an agreement with tariffs? All right, hold on. I'm trying to get the CPI data, and then I'm trying to get this Japanese news. Why? Hold on. CPI, we should easily be able to find this. Look, my thoughts on CPI are that I don't know because we had a crappy PCE. We had a really crappy PPI. CPI is Thursday. Okay, it's Thursday. Why is PPI coming out before CPI? When have they ever done PPI is on Wednesday, CPI is on Thursday? That doesn't happen. It's usually CPI then right? It's usually CPI. That's why I'm confused right here. Okay, so it's on Thursday. So yeah, I won't be able to stream it on Thursday because I'm going to miss the market open that day. But okay, so we'll see what they end up saying on Thursday. The expectation for CPI is looking like 2.9. No, sorry, 2.9. Yes, 2.9. Okay, it's looking like 2.9, which would be an increase month over month. Or actually, no, that would be the same. Last time we had 2.9 as well, right? So Powell's talking on the 17th, so that's different. I don't think the Fed can talk anymore. I think that last week was their now they're in a silent period until FOMC, so they're not going to be able to say anything. But we'll get CPI on Thursday, PPI on Tuesday, or on Wednesday. I've never seen them do it in that order, but they're doing it in that order. And so one fear I have for Hood and a lot of other growth stocks this week is like, what if CPI sucks? What if PPI? By the way, PPI was horrible last month. The S&P didn't care. It was down 0.15%. So like generally, do I think the market cares that much? No. However, we did get a crappy jobs report. If you get a crappy jobs report with labor market weakness and you get inflation accelerating, that is the worst scenario because that is called stagflation, right? Lower growth on jobs, higher inflation. I don't think we get it to be that bad, especially if CPI is better than PPI. PPI can be aggressive, but as long as it doesn't impact CPI, I think the market will overlook it. But like if Hood goes to 115 and you FOMO into it at 115 on Tuesday or tomorrow, and then we get a crappy CPI and then it falls back to 107, right? You'll probably be upset. So like it is kind of tough to figure out how to play this week. Oh yeah, and then you got Klarna IPO on Wednesday, which I think they're going to crush it because the capital markets are great. But do I want to buy a buy now, pay later app right now? Not really. Especially when you look at Chime. I know what's his name? Klarna is different than Chime. But I mean, it's not like Chime has had a successful IPO, or at least, well, let me see. They got to 48. Yeah, no, they haven't. They IPO'd at 37. They got to 48 at the highs. Now they're down 34%. Now, Klarna is probably a much better business on a fundamental basis than Chime, I think. But the point is, like, as a financial, you've got to be executing at a really good level. And I don't know enough about Klarna to say they are. In fact, I kind of think Klarna is looking for some exit liquidity because they wanted to go public 4 years ago. It didn't work out. Then they did a down round. So a lot of investors lost a lot of money, or at least on paper. And now they're not IPOing at a price that was like above that or significantly above that down round. But they were supposed to go public in February. Then you had the tariff stuff. So they got rid of the IPO. Now they're back. So to me, I'm like, they've just been waiting to get these shares into the public markets. And I think the IPO will do well. Unfortunately, I just don't know if the sentiment on a buy now, pay later company is going to be the best over the next couple months. Waking up with Tanner sounds kind of gay. Dude, Tanner said okay, I can't say this because Tanner said the funniest shit to me and Roy about being in an Airbnb together. I cannot say what he said. I got to get permission from him to say it, but like it was the most hilarious shit. about, let's just say Tanner has some quirks about living with other people. And he mentioned one of his quirks to me and Roy. And me and Roy were like, you have an issue with this? And Tanner was like, yeah, I really care about this. And we were like, what, bro? We were like, are you a child? Like it was, I will try to see if he lets me say it live. It's nothing embarrassing or anything. It's just hilarious. And I don't think he would care. In fact, I think a lot of you guys would probably resonate with him. But the fact that he like, after one of our podcasts last week, he was like, guys, we got to talk about something. We're like, what do we get? Like, what's going on? Like, you got some personal stuff. He's like, so at the Airbnb, we're like, really, bro? That's what you kept us 30 minutes to talk about? Like, Ned being Ned, exactly. He's afraid of the dark. Yes, he's afraid of the dark. Snoring? No, it's not about snoring. It's just, let's see on Monday. We have the podcast tomorrow. Monday, I'm gonna see if he lets me say it. It's so funny, but it's like hilarious. Like literally, his girlfriend had to when the podcast was done, she joined the StreamYard and she was like, yes, he has an issue with this, and like, I hate it, but it is what it is. And we were just laughing. It was so funny. So we'll see if he lets us say it. No, it has nothing to do with putting the toilet seat down. Dude, it's so funny. Like, it's like, it's so funny, no one could guess it. I'm telling you, it's so funny, no one could guess it. But that's why it's funny. And so hopefully he lets us say it. Okay, yeah, so I'm not buying Klarna, but we'll see, how that IPO does. Here was Cathie Wood on Friday in her new podcast speaking about none other than Palantir.
She said, well, it is.
Okay, why is the audio so bad on this clip? Hold on, let me pull it up right here instead. Sometimes the audio gets a little hit, so let's pull it up on YouTube instead. Okay, let's pull this up right here.
She said, well, it is true. What happens with Palantir is they'll go in because the CEO has asked them to come in. And they bring the CTO, CEO, all the seniors into the conversation. CTO takes it back and says, okay, well, we need to do a McKinsey study around this. So they pull the pilot from Palantir. And then 1 to 2 years later, when there are no productivity gains, they come back to Palantir with a completely restructured technology staff, mostly because there has been so much foot dragging, and they then engage. And the productivity gains that Palantir is helping enterprises evolve and enjoy are astounding. So just listen to one of their quarterly calls to.
That is why Palantir is getting a multiple. We've talked about this for a while now. The hate that I talked about that I'm receiving online from some of these people, I'm also seeing that to Palantir. I mean, people just cannot stand Palantir for a variety of reasons, but even like the company and the stock, people think it's the most overvalued company in the world. I get it. The valuation is expensive. But I think the core community that believes in Karp, his message, his vision, they are very, very proud to own this company. And again, when you see testimonials like what Cathie Wood was saying, when you see what Fannie Mae says, when you see the level of growth they're putting up, and when you again, I have some more content from AIPCon that I'll upload over the next coming days, and some of the interviews that I had with customers. But I told you guys on Friday, dude, it's real, bro. It's real. Like the use cases they're seeing from the ontology. And Palantir disclosed a bunch of partnerships, extensions with Lear for 5 years, another public company. Their user growth is up 50% to 12,000 people using Foundry. Like the amount of use cases that are expanding and that are becoming exponential for these corporations, there's a reason why they're paying Palantir the amount of money they're paying Palantir. And so I would recommend people watch the Karp interview, and I would also recommend people watch the Ted and Kevin Kolowski interview. I'll clip that and post it separately as well. But they are the two head of global commercials and sales at Palantir. And again, it's very simple. You provide value, you're going to win. You don't provide value, you're not going to win. I think Hood takes the same approach. Like even Vlad's message, if anyone who hasn't seen it on the S&P 500, he said, outside of saying jobs not finished, he said, look, it's an exciting milestone to have Hood join the S&P 500. But I'll tell you guys what I told the team today. We don't stop to celebrate. Our single focus remains building exceptional products for our customers. Vlad is an animal. He wants to just keep going. He doesn't want to stop and smell the flowers. He wants to no, we got it. Let's get into the NASDAQ 100 now. Let's take this to a $500 billion market cap, right? Like with that level of relentless drive, it's hard to have naturally. And I think Karp has that and Vlad has that. And both companies are producing incredible levels of revenue growth, unicorn levels of revenue growth because of the value that they're creating. And I think that's also why people hate them, dude. Like I know Palantir has a lot of political stuff that people hate. I get it. And like people will, assign with their ideological political beliefs. But like, I'm not even talking about the politics of Palantir, or I'm not even talking about the GameStop politics of Robinhood that, is 5 years old. I'm talking about the companies themselves. People cannot stand that these companies are doing well. And as a messenger of these companies, someone who analyzes those companies, I'm feeling the animosity of it. I can only imagine what Karp and Vlad are feeling. But I think if they keep executing, it's not going to matter. If they keep executing, they will continue to do what they do. Sadly, financials don't get into the NASDAQ 100. So here's the thing. If Robinhood can actually prove they're a tech company more than a financial, and that's not going to be easy, but imagine the NASDAQ 100, which again picks more tech over financials. Imagine they think of Robinhood as a legit tech company, freaking Amazon, Nvidia, Google type of tech company. Now, Robinhood's got a long way to go. But the point is, if they can put off that perception over the next couple of years and put up the growth and diversify their income streams to get there, who knows? Maybe that happens. But it would be very exciting. Will Misty keep crashing? Misty will keep crashing if MicroStrategy keeps crashing. MicroStrategy's Saylor's probably going to buy more Bitcoin tomorrow because he tweeted about it. Look, by the way, speaking of MicroStrategy, the amount of MicroStrategy bulls that absolutely despise the S&P 500 as if they were entitled to get into the S&P. I don't know what these people were smoking. And I say that respectfully because even I was conservative that Robinhood wouldn't get into the S&P 500 for a bunch of different reasons. These guys almost act like they are they are the holy grail of the stock market, and they deserve to be in the S&P 500. And this Jeff Walton guy, which I love this guy. He was on my show. We talked about MicroStrategy. We can disagree on certain things, but he did a great podcast with me. He was like, the S&P 500 needs MicroStrategy. MicroStrategy doesn't need the S&P 500. I don't know, bro. I don't know. I don't know if the S&P 500 needs MSTR. The S&P 500 doesn't even need Robinhood. As much as I think they should have Robinhood, they don't need Robinhood. So the level of kind of cockiness here about MSTR having to be in the S&P 500. First of all, if the S&P 500, if MicroStrategy doesn't need them, then why are you complaining about it? It's I think if MicroStrategy will eventually get in, but they are not a company that is a diversified business that anyone can understand. They're a Bitcoin treasury. So for the S&P 500 to fully embrace that, after it took them years to embrace Robinhood, it's not the easiest in my opinion. Now, granted, if Williams Sonoma is in the S&P 500, should MicroStrategy be in? Yes, agreed. The quality of the index is getting worse and worse with some of the picks that they're having. They did get rid of Enphase though, which I was kind of, I didn't think they would get rid of Enphase, but they got rid of Enphase, which is kind of wild because, Enphase 2022 was the darling of Sol, and now it's just completely went, did a 180. But yes, if Williams Sonoma is there, MSTR should be there. But the idea that the committee will feel indebted to some Bitcoin treasury as the thing that will catalyze the thesis of investing in the top 500 companies in the United States, I think that's a bit aggressive. And by the way, I would say that thesis is aggressive on Robinhood too. As much as I thought Robinhood deserves to be in because of their pure execution. MicroStrategy has not executed anything. They've executed on diluting shareholders to buy more Bitcoin. It's but Bitcoin's not going to the moon. I mean, yes, it's chilling above 100,000, but that's kind of December 2024 old news. It passed 100,000 a while ago. It needs to get to 150, 200 to really get exciting. It's not there yet. Maybe when it does, the S&P 500 will get more excited about it. But in the past 9 months, what has Saylor done other than dilute shareholders? So, and it's not hating against MSTR. I own Misty, but the whole reason I'm even getting into this is because Misty will keep going down if MSTR keeps going down. MSTR will keep going down if Bitcoin keeps staying flat or goes down. So it all goes back down. It all goes back up it all comes down to Bitcoin going up. And hopefully MSTR expands their premium. And then Misty gets more juicy premium from the covered calls they sell on MSTR. But if that doesn't happen, then all three of those assets are just going to be flat or down. And also ETH is the new hot chick at the bar, which is why I think a lot of the MSTR shareholders are also pretty upset because you're just getting a lot of attention on Ethereum. Tesla, by the way, at 355. There you go. Tesla getting a 1.32% move after hours. But you got a lot more people that are excited about Ethereum. And I can't blame people for being excited about Ethereum because Ethereum has a use case. Like, I don't really know the Bitcoin use case other than store of value. And that's not hating on Bitcoin. And if you think that's hate on Bitcoin, I can't help you. Like, I believe in the overarching thesis around Bitcoin as a hedge against the debasement of the US dollar. But I don't see the use case in it other than storing the value. Now, some people argue the storing of value is such a big use case that it needs to hyper speed itself into becoming the most valuable asset on the planet. Yeah, but the US dollar is not the most unvaluable asset on the planet. In fact, the US dollar is actually pretty valuable, even though it's been in a declining trend for the past 5 months. So until that happens and you get this massive rotation into Bitcoin, like, I mean, there's got to be something else to get Bitcoin to go higher. And it's not hype. It's not the ETFs. It's not the use case. So it's kind of just like, it's dead money right now, which is okay. Because maybe you just acquire MSTR at 300, one day it's at 600, and you'll be happy with that return. But it doesn't have to go to 600 overnight, and it definitely doesn't need to be included in the S&P 500 because they had 14,000% returns on their EPS year over year because of the FASB accounting rules that now shows that Bitcoin is technically earnings per share. Like, the committee is just not going to be like, oh my goodness, that's the most exciting story in the world. I'm using Robinhood Legend for those that are asking. That was the app that I was using on screen. If you're in America, I believe it's available to you. I think if you're international, it's not, but Legend is the product I'm using from Robinhood's desktop app. So that's what I would have to say about MicroStrategy and Ethereum. This could be the new full-time studio. Dude, the sound in here, even like me hearing myself, it is so good. I love it. But like, unfortunately, like there's not a cool background and all that stuff. And like, does that stuff really matter? I mean, like, yeah, kind of. I also would have to come downstairs every day to like set it up and stuff. But I need to audio proof my studio the way this place is audio proofed. If I can do that, I think we would be perfect. So we got to see if we can do that. But this studio is great. How is the new apartment going? I have barely had time to bask in it. Like, I've been here for like 3-4 days. I will say, although I haven't shown the view, dude, like every time I walk into this apartment, every time I'm just sitting on the couch, like it is, especially when the sun starts to set and you get kind of like a pink sky in Jersey, like it is like the view itself and seeing it every day. It is so humbling. It's more humbling than any of the events I'm going to and stuff like that, because it's your home, it's your sanctuary, right? And the fact that you're able to like actually like sit and just like stare at your view, or like I do a lot of pacing. I walk a lot inside. Like with that basketball, I'll just be like spinning the basketball on my finger and walking around and thinking. Like I do that, especially like I think I walked around my apartment, not like my apartment complex, like literally the floor of my apartment for I think 4 hours. Oh, by the way, I got a phone call yesterday. I got to tell this story. This was the craziest phone call I got yesterday. But I had like multiple phone calls yesterday, but I got a certain phone call that I'll talk about. I'll just explain you the gist of what happened. But just walking through the apartment and like walking through the view constantly, it hasn't been desensitized yet. Derek was talking about his ocean view and how it's desensitized because he lived there for 15 years, and eventually that'll happen to me. But it is really humbling, dude. It is really, really, really humbling. And to have that as your sanctuary, it just means a lot. I think you have ADD. I think I do as well. I do, dude. I spin the basketball on my finger. I showed it a couple streams ago. I should have brought it downstairs. Like I would have been doing it right now. Steve is I FaceTimed with Steve, but he has not been to the apartment yet. But yeah, it's just really special. That's all I'll say. I'm incredibly grateful to be in this situation. I waited 5 years to get here. I dealt with all the, you live in your mom's basement, nonsense for 5 years. I went back to my parents today. So dude, the coolest thing, I realized the coolest thing about moving out is that when you come back home, the type of food I got, dude, I was treated like a king today. Okay. I came back at like 10 a.m. to my parents' spot. Walked in, you got fresh chai, which is what Indians drink, ready for me. I'm talking with my parents for 2 hours, and you actually have stuff to talk about because you haven't seen them every day, right? So you have to update them on your life. It's actually like really healthy because like you actually can have a healthy conversation without like talking about what you did last night, because if you lived with your parents, you probably would have told them what you did last night, right? So like there's actually substance to the conversation. And then when it came to lunch, I mean, like my mom made these chicken kebabs with rice and fish. I'm like, holy, my sister, she's like, why are you treating him like a king? Like he was just gone for 5 days. And my mom was like, because I haven't seen him in 5 days. It was great, bro. It was absolutely great. So yeah, it was awesome. Yeah, decrease supply, you increase demand, bro. It's you move out. Like there's a sort of, what is that quote? Like the heart grows fonder or some shit. What is that quote? Heart grows fonder quote. Absence makes the heart grow fonder. Okay, I was pretty close. I was missing the absence part, but like, see, this is why Gemini is gonna beat ChatGPT, bro. Look how, like, I feel like if I typed in heart grows fonder on ChatGPT, it wouldn't have easily given it. That was like less than a millisecond, bro, of finding the answer. But yeah, like if you're further away from, like, I'm so excited to do this future show because we haven't done a show in like 3 days, and I missed it, right? Like because like this is the routine, and like the routine got interrupted over the past week. So coming back home today, I could tell my mom really missed me, my dad really missed me, and I think it's healthy to like visit every week or every 2 weeks versus like be there every single day, because it's just as an adult you have a better relationship, I think, as well. Absence grows the stacks needle. Exactly. That's the new phrase. And yeah, so so the point is, I've not really, like, dude, I've barely walked around near my neighborhood. Like I haven't even like went to the local coffee shops. Like I have done nothing in this apartment because of the traveling, and I will continue to do nothing this week because I'm gone. But I'm looking forward to settling in and like really beginning to take it all in. The one thing I can say I've done is see this view every single day, wake up to this view every day. And it's just really inspiring and really humbling, because, you know, you work really hard to get here, but also it shows you how, like, first of all, now you got to pay rent. So you can't be complacent, right? And I'm using rent metaphorically as like, hey, now you're a big boy, right? Like, I've been paying a lot of my bills. I've been paying all my bills since I was in freaking like senior year of high school. But like rent is one of the big bills that I'm paying now. So it motivates you to work harder. But number two, it's like, well, now you realize the only reason you got here is because of your work ethic, and seeing the view every day can't make you complacent. In fact, it should only put a fire up your ass to work even harder, to one day have an even better view. You know, I've not met any of my neighbors, none of them. I've literally talked to nobody here, bro. But yeah, dude, my sister was literally like, hey, bro. My sister came downstairs, she was like, hi. And my mom was like, welcome back to our house. You know, it's just like, it's definitely a different experience. But the funny thing is, even if I lived home, I wouldn't have been home all week because I would have been traveling. So it's kind of like the amount of traveling still means I wouldn't have even been home. But yeah, I think I'm going to try to see them every week or every 2 weeks to keep connection with them. And I like that I'm close to them. I like that I'm not in Miami or I'm not in LA. Like I can literally just drive down to my parents. Or FSD. Dude, FSD today did some amazing shit. Like, I don't even want to describe it because I already went into a rant like 2 weeks ago describing something, but it was a lane switch or something. I did nothing, bro. I wasn't sleeping, but I was basically like, I had zero fears, and FSD just handled it. I mean, like, it is getting so good. It's just, it's not producing the earnings yet, but eventually it will. But absolutely, Tesla's becoming incredible. Okay, the phone call I got yesterday. So I got a phone call. Someone wants to buy out AK Media. This was the most wild phone call. Someone that you guys all know, someone that I know very well, someone who's probably worth, I don't know, a couple $100 million, I would say. It's fire under your ass, not in your ass. Did I say in your ass? I meant to say under your ass. Fire in your ass is different. But he calls me up. He's like, hey, I'm like, hello, sir. He's like, I'm working on this new idea. I want to do a merger with AK Media. I was like, what the fuck is like a merger? He's like, yeah. He was like, how much do you want? I was like, wait, hold on, bro. Like, what is going on right now? It's not Jay Kush. It's not Triple V. It's someone else. But you guys know. And so I listened. I listened to the pitch, obviously, because what you do in business is you always listen. The answer to the question is going to be no, especially now that I've had 24 hours to think about it. But I don't blame him for asking, because his vision made a lot of sense. It's just the independence of my brand. I do not want to be, I never want to give that up. That's kind of what I preach, right? And there's really not an exciting amount of money to give that up, given, again, I just think in the future, the money will come without having to be bought out. Also, what does it even mean to buy you out? You know, it's like, so obviously I'm not doing it, but it was interesting to get that phone. It was the first time I ever got offered, like, hey, let me just buy you out. Let me just buy out AK Media. So it was not me, Kevin. It was not Mr. Beast. It was not Jason. Honestly, none of you guys have guessed it in the chat. It's not Ben Shapiro. Yeah, I don't think you guys could guess it. You guys know who it is, but I don't think you guys could. It's actually kind of hard to guess it. I was surprised when I got the phone call. But it's not CNBC, it's not Bloomberg, it's someone who's not even building a media company, but they want to build a media company. The number one thing they said, and this is why I listened to the call, right? Because I wanted to understand their logic behind it. It's not Derek, it's not Robinhood. Trust me, dude. Like honestly, like I don't think you guys can guess it, and I don't want to say who it is because I'm not going forward with it. But for me, it was very validating because he was like, "Look, you have a lot of people that listen to you every day to get the news, listen to you to get insights, listen to you to get opinions, even if they don't agree with you." But more importantly, a lot of them are probably listening because you can make the stock market exciting. And that comes from passion, that comes from energy. And he's like, have you ever worked on Wall Street? I was like, dude, I don't even think I've been on Wall Street ever. Like I've been to the financial district. I've never been near the bull on Wall Street. Like I've never stepped into JP Morgan, Goldman's. Like all of this stuff is just Chris Patel, right? A mentor. Steve, a mentor. Matt Money, a mentor. And then myself and my ambition to learn about shit on my own via YouTube over the past 5 years. Like that's how I've learned the stock market. And there's a lot more I have to learn, but like that's how I at least I got my base to be able to talk in terms of these stock market terms. It is not Tom Lee. It is not Figure. Like it's not PBD. It's not Fanatics guy. I'm telling you, none. I'm like a lot of you guys guessed Jared Kushner, and I was saying like, oh, you guys didn't guess it. I said a couple of you guys guessed it. None of you have guessed it. Dead ass, none of you. I would say if one of you guys guessed, I'm telling you, none of you have guessed it because it's hard to guess, although you all know it. And so it is what it is. But that offer was very validating to me because at some point it was him basically saying, hey, I see what you've built. I see how you built it. I've seen the authenticity of your audience, and I want to merge with that. And I applaud the offer, and it gave me a lot to think about. But it's just very hard for me to get to that point. Because it's just like, I like what I'm building myself, doing it my own way. You always got to take the phone call though. You always got to take the phone call. You never say no. You always listen because you never know. Maybe you do end up taking a deal, and maybe if it's really that much, but you got to listen and you got to see how people are thinking because you'll probably gain more insights. And I think this is just like general business advice. I've always taken the meeting, always. A lot of these meetings are pointless, bro. Last week I took a meeting. I was like, wow, I was in my car listening. I was like, dude, why the fuck am I in this meeting? Right? This is a waste of time. But sometimes one guy tells another guy to tell you to take the meeting and you don't want to piss that guy off because then it pisses his boss off. And so you take the fucking meeting and then you're just like, okay, this was a waste of time, but at least that guy doesn't hate me. So it's not Kathy Wood. It's not Barstool. Dude, I'm telling you, no one's going to guess it. It's a hard guess, but it's one of those things that I will not be engaging in. But it was a good conversation. And who knows, maybe there's a collaboration in the future, even if it's not like a full-on merger or something. But it's the CEO of Grindr. Yes, that is it. The CEO of Grindr wants to buy out AK Media because obviously there's content for the Grindr audience that they want me to talk about. That's how it's playing out. Dude, Ellen DeGeneres doesn't even have a show anymore. It's not Ellen DeGeneres. By the way, have you guys heard of Ellen? She's like a dick, apparently. Apparently, she was like the worst person in show business. Like all the employees, once the show ended, were like, dude, this woman like was unfathomable. She was just like, she just sucked as like a boss. So I don't think people liked being on that show. It's not Oprah. It's not Trump. It's not Dumb Money. Dude, Dumb Money is not like a media company. Like those three guys, and I love those three guys. They do it because like they're bored, right? They're all very, very wealthy, and they're not building some media enterprise. Like they don't need media is not a good business, bro. Media makes no money. You don't get a multiple on media. Technology it gets a multiple, and technology is infinitely scaled. Now, media is good to get distribution, and then eventually, if you build something on top of it, like candy bars, like Mr. Beast, or like some type of technology product, you need distribution. That is the value of media. But the value of media is not in the advertising. That's your business model. It's like, bro, like no. Like media buyouts are always horrible because there's no multiple to put on media. And the business models suck, right? Like, especially if you're a one-person show, like what if you get sick? Okay, boom, your business is done. Like you can't make your content. So media is not a good business model. It doesn't get a multiple, but media is very important for getting distribution on another business model. And I think the reason the person called me is because they realized the distribution that I'm gaining and they want to access that, which makes sense. But I would just rather keep that, more independent to myself. So there we go. That's what we got. Okay. What else? What other macro news? We're 2 hours. I actually technically have to get kicked out of the studio, but if no one else booked it, because you're only allowed for 2 hours, then I will continue to stay. And this is a chart I wanted to show as well. This is just global rate cuts. We've had 88 rate cuts across the year. Since 2020, not since the year. Wait, no, sorry, I'm reading it wrong. There have been 88 rate cuts worldwide year to date, the most since 2020. This puts 2025 on track for the third fastest global cutting cycle on record, according to Bank of America. By the way, shout out to Bank of America that was screaming 0 rate cuts this whole year. Friday, we think there's going to be 2 cuts. It's like, no shit. There's going to be at least 1 cut. So Bank of America, whoever was leading their macro policy, they just completely got that one wrong. And I wonder if their clients are pissed off about that, because that could have definitely changed their positioning based on their equities. But yeah, it looks like the Fed's going to cut. We've had 88 cuts this year. We're probably going to need some more cuts. So that was, I think that was the last macro chart that I wanted to share. Raul, thank you for the $10 super chat. Appreciate you being here, part of the channel. Charles, thank you for it. This is the first super chat I've ever bought, and it's because of Mitch's channel has changed my life. Charles, this is definitely not the first super chat you've ever bought. I feel like you've sent a super chat before, but if you haven't, thank you for the super chat, and thank you for being here and being part of the channel. Samuel, thank you for the super chat. Admit your market open close streams are a more relatable and entertaining version of CNBC. Your success is well deserved, and haters are just jealous. Thanks for the amazing content, Samuel. Thank you for that. That is also kind of what the person was saying over the weekend, which is, hey, you're a bit more entertaining than CNBC, and there's probably a big market opportunity to beat CNBC. I'm not that interested in beating CNBC though. Like CNBC and Bloomberg, the reason they're still relevant is because they have massive facilities that have 24/7 reporters. That, like, there's one person who is only going to talk about the White House. There's one person who's only going to talk about semiconductors. There's one person who's only going to talk about AI. And they employ thousands of people, producers, bookers, all this stuff, like makeup, hair, all that shit. Same thing with Bloomberg. And that's how they get to run it 24/7. And then obviously they have a lot of relationships with pharmaceutical companies and car companies. And they get a lot of money for advertising, which also conflicts a lot of their coverage. But that's how they make their money. I have zero interest in building some studio and facility and having like 5 producers. Like, I just want my computer, my camera, my mic, decent lighting, decent background, and then the chat. That's it. That's all I need. That is all I need to do this. And I quite frankly think the level of analysis, the quality of analysis, the guests that we can get on the show that are just regular people like Jose and Chris and Steve, it's just a bit better than a lot of the analysts on CNBC. And by the way, some of the analysts I love, Dan Ives, I love, Tom Lee, I've loved, but Tom Lee's also come on my show, right? Because he also wants to access a different type of audience. So I just think media is growing and things are changing. And I don't know how relevant CNBC and Bloomberg are in the next decade, but I'm not interested in the whole studio facility element of what they're doing. Yeah, and thankfully we've had Palantir and NVIDIA go up over the past 3 years. I mean, look, at the end of the day, if you follow CNBC or Bloomberg, you're also subliminally or explicitly following the advice you see, quote unquote advice, on the screen, right? So if they always have a bear come on the show, and they do a good job of balancing it out, but if they always have a bear 24/7, you're going to lose a lot of money. Tom Lee was bullish for the past 3 years. He has been on CNBC like 1,000 times over the past 3 years. A lot of people listen to Tom Lee. A lot of people make a lot of money. So they kind of associate CNBC as a channel that's worth them listening to because they have people that are able to tell them how to, best allocate capital. I'm no Tom Lee, but, my channel has been relatively bullish over the past 3 years, which has been directionally correct so far. And hopefully that continues. And, we've had some winners with Palantir, Hood, and NVIDIA, Palantir and Hood being the main ones. But also, I think it's not even about finding the winners. It's about finding the gems that all of us as a community, even if I'm not personally in them, doing well. So like a lot of you guys are in HIMS, has done very well. Lemonade, done very well. Rocket Lab, done very well. Why? Because Matt Money is part of like our YouTube community, and Matt Money's been on my channel all the time. And so like there's a bunch of you guys that love Rocket Lab. I got into it at $25 because of Matt. Didn't get into it at $4. Rocket Lab's a win for me, win for the channel, win for the community. But it's only because you have those personalities in retail that are able to come up with these ideas and then showcase them via the stream. And I think, that is the goal, to just continue going into the future, whether it's good or bad, dealing with the volatility of it back and forth. App Lovin', by the way, up 8%, $40 after hours. That one's moving. Hoodie losing 110, but still up about 7.43% after hours. Yeah, SoFi, Goo. I mean, Austin and I'm Benny in the chat. These and definitely a couple more of you, but these two have just been yelling about Google for the past 8 months. Like, literally just like guys, like so cold. Like these three are also my mods, so I'm able to remember their names. Like constantly Google. They've helped me understand the bull case on Google, which is why I can better communicate to you guys why I'm bullish Google, or why at least Google probably doesn't deserve to be trading at $145. And Google's a big win for a lot of you guys. They got into Google. Tanner with SoFi, like there's so many parts of this community that feels so much more organic and exciting versus like a full-on production of CNBC. Yeah, Nebius, Nate in the chat, who's been screaming. Sam just crossed 20K on Twitter, by the way. So shout out to Sam. I'll link his Twitter for those that don't follow him. But he gave us the Nebius thesis at 30. He's a good friend of the channel as well. Like, I mean, that's what it's about. Jason with the technical analysis. A lot of you guys got Reddit because of Jason when he was talking about it at 115. I mean, like that to me is how you really build something special, not just like some, fancy studio to do it. Oscar, yeah. I mean, like now granted, we're in a bull market, right? It's helping, but at the end of the day, you still need to find the gems in that bull market to have this play out. Yeah, Space Mob killed it with ASTS. Dude, none of you guys have guessed it yet. It's not TYT. It's not Tucker Carlson, which has said some very, I guess I'll just say it's hard to describe things over the weekend that he's going viral over on his podcast. But, it's none of these people you guys are guessing. But it was just validating to me to get an offer. I mean, like, everyone wants to be loved a little bit. And so it's the first time I ever got an offer, like a legit offer. And I was just like, oh, like, people are obviously willing to pay for distribution. But then it's a question of like, are you willing to give up your independence? And like, the answer is no. Like, it's just not. As compelling as the offer can be, the answer is just no. The answer is just no. Fabio, thank you for the $20 super chat. Amid started options this week. Finished the week up 15% doing cover calls on Oscar, TSLL, Oscar 35 strike, 2K in premium, TSLL looking to roll to a $15 strike tomorrow morning, and excited for the premiums. Not bad, dude. Congrats. I don't think covered calls are the hardest thing for retail to learn. I think they're very beneficial as a tool. And I think, one of the reasons the channel talks about them so much is because they really can help navigate times of volatility. So awesome stuff that you're in it. Drake did not reach out for the buyout offer. However, I did listen this weekend. It's funny that you bring Drake up. I've been listening to a lot of Drake, bro. I know I'm a Drake fan, but nothing was the same. I've been listening to it like on repeat. That is the album where Drake like started to hit his exponential growth phase, and like he was like nothing was the same, right? Like he was the kid in the basement, and now he's Drake. And so the way he's kind of talking about navigating what it feels like, navigating friends, families, relationships, the media, hatred, like that stuff has been resonating with me recently. And also I listened to the Rap Radar podcast he did back in 2019. I think I've watched this thing like 4 or 5 times now, but that was in 2019. Drake had just been through some controversy and, kind of talking, like he talks for 3 hours about just like the nature of it's also a decade after he hit the scene in 2010. And so the takeaway from here is he talked about what it means to like get into a position of dominance and actually scale and maintain that dominance in whatever creative field you're in. And then also what it feels like to deal with the hate. Because there's a lot of fucking hate, bro. There's a lot of hate. And it's just like, how do you navigate that? How do you deal with that? And so yeah, Drake did not offer to buy me out, but I have been listening to a lot more about his perspectives on what it feels like to just get to a different stage, because it is stressful. Although you also realize you have to keep moving forward, and if you're going to be a public figure, like everyone's going to have an opinion, you have to be ready for that. But it's like really over the weekend, the shit I saw with Hood and Palantir, like 95% of people were just like happy for their success, my success as a result. That ugly 5% reared their head this weekend. And I was like, my goodness, these guys really hate these companies. And as a result, they hate me. Like, what happens if Grab gets to 10? Are they just going to hate Grab because they hate me? It's like it's just, you can't win with these people. And so you really have to have a mental framework to navigate that. Because otherwise, there's no other way to move forward. Come Through is not the best song on that album. First of all, that's on the deluxe. Okay, so that doesn't even count as the first as part of the actual original album. I think every song there's a banger. I think Pound Cake is a banger. I think Furthest Thing is a banger. I think Worst is a banger. Connect is a banger. Come Through is a banger. I don't know if it's the best song on Come Through on Nothing Was Same. But that song's been also that song's the most that album is the most concise album that he's ever done. That's why he likes that album, because there's only like 14 songs. So, a lot of these albums are so bloated and they have all these songs to play the streaming game. But like back in 2013, 2014, you had a concise 10 to 15 song album. Like people can listen to it in 1 hour and it like tells a story. The problem with music nowadays, it's like it's just filled with shit to get the Spotify streaming numbers up. And Drake's guilty of that. His past 3 albums have been basura, bro. They've been trash. Like I have not liked that. I've liked certain elements of them, but as a cohesive project, they've just been horrible. So, going back 10 years, those albums were a lot better. Anyway, so that was the story over the weekend. I will not be accepting a buyout, but it was interesting to really hear different perspectives on, what people are thinking of your potential. And so we just got to keep moving forward. Keep doing it. It's not Josh Brown. It's not the Compound and Friends. It's not Roaring Kitty. He's not really a media entity. It's not Shaq, although Shaq has so many media entities. It's kind of crazy. Ravens 29, Bills 19. Okay. Is that the biggest game? Is there any more games? Did we have a game in the afternoon? Or no? Dude, I typed in NFL stock again, bro. What is wrong with me? I need to type in NFL schedule. 27-19. Oh, no, there were more games today. Hold on. There were the Rams won. The Packers won, the Niners won, the Broncos won, the Raiders won, Bengals, Commanders, Buccaneers, Cardinals. Dude, there was a lot of games today. Jaguars, Colts, Steelers, Chargers. Oh, that was yesterday. And then Eagles a couple days ago. Okay, cool. Zocolt has 4,000 on the Ravens. Dude, you freaking... Oh, that's a pivot. That segues into Robinhood's NFL contracts. Dude, the amount of people I'm seeing on Twitter tweet about these freaking Robinhood contracts and degenning into this shit. Look at the volume on this. The volume is already 6 million for the Bills, 5.9 million for Baltimore. Obviously, Baltimore 78-23. I think all of that is Robinhood. Even if half of that is Kalshi, that's a lot of volume, bro. Like NFL, this could be like a $5-10 million revenue stream over the next 4 months and be massive for Robin. So definitely another bull case for Robinhood. The way he said Bengals, what? How did I say it wrong? Hold on. It's Cincinnati. Hold on. Let me see. How do you say this shit? It's Bengals.
Bengals.
It's Bengals, right? I said it the right.
Bengals.
I don't think that's that far off. What did they say? Bengals or something? It sounds like Bengali, yes. Oh, I said Bengals. Okay, I meant to say Bengals. I don't know why I said Bengals, but I'm trying to get better with these names. Trying to get better. How high do you see Grab going? I'm still sticking to $10 2027, dude. I'm still sticking to it. $10 2027. That's my price target. If we don't get there, I'll be wrong publicly. If we get there, I'll be right publicly. I just need 750 for me to make money, but $10 would make me a lot of, like 750. I make 85 grand. $10, I make 540 grand. So it's like those extra $2.50 makes a big deal. And then if it's like, do I think it's stuck next year at $5? Like, I don't think so, bro. Maybe I'm wrong. I don't think so. I really don't. I think it's hard for the street to ignore growth, especially when rates come down. Oh, I meant to say it right. Yeah, exactly. I meant to say it right. Amid brother, with so much respect, you remind me of Kevin G from Mean Girls. Is that the Indian guy from Mean Girls? This is, dude, I remember this guy. This is who I remind you of? Kevin G. Goodness gracious, bro. I haven't watched Mean Girls in a minute. What will it take for your thesis to be wrong? Lack of growth, lack of margins. I don't see any of those happening. But it could happen. I just don't see it happening. By the way, isn't the All In podcast this like tomorrow? Carp and Vlad are going to be there, right? Or the All In summit? Yeah, isn't it? Dude, so I think like if Vlad and Carp are going to be there, Vlad's got to be at the Vegas event. So he's got to go to LA like tomorrow. Or it says 9/7/2025. So is it happening today? It's just not recorded. Maybe it's already happening right now. So we'll get that content soon from All In with Vlad and Carp. And so we're gonna see what happens there. Why are all you guys agreeing with Kevin G, bro? Why does everyone think I'm Kevin G? Okay, is that pretty much it? I think I talked about everything I needed to talk about. We talked about all this macro stuff, talked about jobs, talked about AI, talked about Bitmine. Chris Camillo tweeted this in the morning. Speaking of jobs, he said, concerns about job loss to AI and robotics are fair short-term but absurd long-term. The aging global population alone will soon need hundreds of millions of care workers, requiring a shift of labor from repetitive automatable tasks to higher value roles that tap deeper into human capabilities to benefit both workers and society. Dude, why is that word so hard? Automate? Is that a word? Automatable? I feel like I've never heard that word before. But basically he's saying, hey, you're going to need a lot of care workers, which is going to change in regards to the increase of job loss. I don't know if that deals with the like a bunch of software engineers losing their job, right? That's like a whole different perspective. But he does think I haven't heard this argument before, the global population aging, which is aging at a pretty aggressive pace, and we're not having enough babies to deal with that. I don't know what the hell's going to happen in 40 years, but that will require more care work, and seems like that could create a lot more jobs as well. Weekly schedule. Okay, cool. Let's end on that. Steve is not here today. Steve actually has a busy week. He's got a lot of stuff going on, including myself with a busy week. So hopefully Steve can join. I think Matt, Steve, and I, so Arnie's going to be here on Friday. Not Friday. Arnie's going to be here on Tuesday. And so is Amir. They're going to live with me for a week. And so they'll be here. And so Arnie will be here. What's his name? Arnie, Amir, Roy's going to be here. Matt's going to be here. There's an event happening that I can't talk about, like at the end of the week, and all of us are going to be at that event, and eventually I think we'll be able to talk about it, but all of them are traveling to come to the event. And so Arnie and Amir are going to live with me. Steve, Matt, and I, Steve's not coming to the event, but Steve, Matt, and I are trying to get lunch in New York. So hopefully we'll be able to do that. But Steve's got a busy week. Tanner's actually not coming, but I'll see Tanner in Vegas in a couple days. Steve's got some like retreat corporate thing that he has to go to. So he's going to be busy for a couple days. So it's going to be a busy week for everybody. But yeah, they will all be here, and hopefully I'll be able to. I'll definitely stream with Amir and Arnie because they'll be living with me. Hopefully Matt will come over to the apartment and we'll all be able to stream together. Maybe do like a Pouncer weekly in person. That would be really fun. But okay, so the schedule for this week. So tomorrow, market open, market close, normal. Nothing changing. Probably from this room. Tuesday, no market open, no market close, because I'll be on a flight Tuesday morning to Vegas. Wednesday, market open. Okay, let me write this down somewhere. I'm going to make a YouTube post about this so no one gets upset when we don't have it. Okay, so Monday, market open, market close. Tuesday, none. Wednesday, open but no close. Thursday, open but no close. Friday, actually, no. What am I saying? Wait, hold on. What is Friday? Thursday is none. Friday is also probably none, to be honest. I want to say the close on Friday, but probably none. That's 3 days of none, which really sucks, but I promise this is the last week, and then we'll be back to normal. But yeah, I'm not happy about it either, bro. This like I hate that, but like these are good opportunities, right? Like being at the Vegas, like that's just something that, like that's a great opportunity, right? Being at AIPCon this weekend, it was a great opportunity. Like these are some of these things you just have to take those opportunities and be there. But yeah, Friday maybe a close. I mean potentially, but it seems like Friday is gonna be tough for a close too. So let's put maybe close here. but definitely Tuesday and Thursday. No, hopefully Wednesday makes up for it if Tanner wakes up early with me on West Coast time and we can do the market open together. But I doubt he's going to wake up, bro. That man needs his sleep. So I don't know if he's going to wake up. Yeah, we need the dentist will not be able to fill in, but we need someone who can legit fill in. We don't have someone who can do that yet. What are we supposed to do instead? Actually get work done? Dude, hopefully the market doesn't tank, because if the market's at least decent this week, then, maybe it'll be okay if there's no show. If the market's tanking, everyone wants to know what's happening, right? And that's when we need each other more than anything. HR did not approve this, unfortunately. Yeah, Mick gets a new apartment and gets lazy here. Dude, that's the thing I hate about this. I wanted to settle in for these 2 weeks and get the routine in the apartment, but September is busy. So, we'll get into the routine and make sure it's constant as normal. But we got to get through this week. Jose probably will still do his market open every day unless he's still on vacation. So on his channel, you'll definitely be able to do it. Jose and Neil, I think they do one together. Do I stream on Wednesday? Yes, Wednesday will be the open, not the close. Paper Gains has a weekly technical analysis every Monday. So I think tomorrow he'll have that technical analysis, even if we can't do technical Tuesday. But yeah, that seems to be the schedule. Chris will again be at Vegas. So for those that'll be here, you guys get to see Chris, Tanner, Roy, and myself. And Chris will probably be on the channel starting next week. I mean, he just got back from Iceland on Friday. So no, not even Friday, yesterday, Saturday. No, Friday night. I was on the phone with him yesterday in the morning. So Friday night he got back. And yeah, he should be back on the channel soon. And that's it. So there we go. That's what we got. That is what we got. One more week of this, and then we'll be back to our regular schedule. Again, we'll do a poll right here. Yes, also Matt Money and Chrissy told me about that. They're restarting Cash Flow Chronicles. Hopefully they'll be able to do that at least a couple times a week. So you guys will get that from them. That is one of my favorite podcasts by two guys that I really respect, talking about stocks, macro, all that stuff. So that'll be starting again. But for the week, what do we think? Bullish or bearish? Or let's say green or red for the week. Green or red for the week. By the way, 61% of you said NVIDIA, most valuable company, 22% Google, 11% Amazon, 6% Microsoft. So NVIDIA still takes the cake for most of you. Red or green week? What do we think? Red or green? What do we got? I want to say green, but obviously CPI is going to be a big thing to navigate it. If CPI comes in decent, I don't think PPI is going to come in good because of the tariffs, but I think if CPI, and I know PPI is kind of an indicator for CPI, but let's say CPI is not that bad. Maybe we escape some pain. I think Hood should be 120 this week. I really do. I think the S&P inflows should be enough, but it also might not be enough. And so I don't think anyone should chase it if the CPI comes in bad and we fall all the way back to 100, which I think would get a lot of people to buy the dip given they're getting into the S&P, right? So I think there's a floor to the stock probably at, I would say at least 100. I don't think we're going below 100, but we got to see. We got to see by the end of this week. What's Jose's channel? Let me link it right here in the chat for those that don't have his channel. We will also still do the Tech Bros podcast with Tanner and Roy tomorrow. CPI is Thursday, PPI is Wednesday. I don't know why they're doing it the opposite of each other, but usually it's CPI then PPI, but CPI will be Thursday. So Wednesday I'll be live from Vegas, and so we'll see PPI, and hopefully it's not that bad, but we'll cover that on Wednesday. All right, there you go. That's it. I think we are done for the day. I think we're good. Nothing else too crazy. That's it. We had a long week ahead. Trump is not live, although Trump did talk to the media a little bit. I don't know if we got some quotes from that. He'll probably be live later this week. I think the whole Trump is like sick rumor, I don't know if that's that serious anymore, given he did a bunch of executive orders and a bunch of announcements about all this stuff. He's talking to the press, so that stuff is kind of not as strong. But Yeah, we're going to see what happens this week in regards to any of his announcements. India is still playing hardball with tariffs. Brazil's playing hardball. So there's still a lot of these macro updates. I thought we would have an India deal by now. It looks like that's not happening until the end of the year at earliest. So we got to see. But we got some more trade deals. CPI is decent. Labor market doesn't tank. Corporate earnings are strong Q3. I think we end the year out 6,800. By the way, Tom Lee is bullish for the rest of the month. His technical strategist, Mark Newton, is actually kind of bearish. He thinks we probably have a 2 to 3% pullback on the S&P before we get back to being in the green. So him and his technical analysts kind of disagree. Take it for what it's worth. But yeah, you do have those different perspectives. And in general, his technical analyst did say in a note, in an email today that, hey, if you do get a 3% drop, you buy that dip. And so we got to see if that happens throughout the rest of the month. Okay, cool. That is it. We are done. Dude, we got into the S&P 500. We freaking got into the S&P 500. So crazy. It happened. It really happened. We saw the candle. I didn't believe the candle because I've obviously been burned by the candle before in the past. But it did indeed happen. This was the moment when I officially found out that it was a thing. Well, basically when all of us found out.
We are in. We're in, folks. Robinhood is a top 500 company in the United States of America. It is a
Dude, the people around me. I had look. This is what it means to be a content creator. This is what it means. It means to not give a you know what about anyone around you and just like do your thing. And it's like, you know, some of those TikTokers like interview people in Miami in the streets and shit, and they're like they don't care what anyone thinks. That was me. It was just S&P 500 Robinhood versus like random interviews on the street, and I just didn't care. It was just like it happened. It really freaking happened.
official. We are in. They did it. They gave it to us. Up 7.5%, 108.82. We hit 110 at one point. App Lovin' up 7.5%. MCore up 2.65%. App Lovin' and Robinhood, two of the names that people thought probably should get in. They are officially in.
It was exciting, bro. It was exciting. So it was cool, dude. It was cool. It was cool that my cousin was with me as well. She got to experience she actually watches the show every day. She's like really getting into the market. So she like listens. She like wakes up early every morning and she like listens to the show. She's like 2 years younger than me. And so it's cool that she was there to experience the whole thing. Her portfolio hit all-time highs. Like it was so dope, bro. And they deserve it. They deserve it. Hood deserves it. Like, yeah, all of us were doubting it, right? Like all of us were like, just like, really, is it actually like, are they actually letting us into the cool kids club? The same thing with Palantir, right? When they let Palantir in, and they did it. And it's like App Lovin' and Hood really did deserve it. MCore, again, I just don't know that much about, but App Lovin' and Hood, $100 billion companies, they deserved it. And we got it. Dude, I absolutely scared the civilians around me. Like they had no idea. One guy turned around. There was a moment where I was on the phone with Tanner. He called in. One guy turned around, and I was like, "Yeah, this guy's looking at me. Like it doesn't matter, bro. We did it. We freaking did it." So it was cool, dude. Me and Steve didn't even talk about it. Dude, me and Steve don't talk about Robinhood. Like we called yesterday, but like we didn't mention Robinhood at all. He didn't. He didn't say anything about it, and I didn't bring it up because like. I don't need to talk about it with him. But obviously, if he was invested in Robinhood, we probably would have talked about it a lot more. But Steve is just like, he has not understood the story. And to his credit, he has not cared about the story. You don't have to care about every story. But just given how much me and Tanner talk about it and given how much we talk to Steve, you would think he like cares more about the story. He does not give a shit. But Robinhood could go to $200. He would not care. He really doesn't care. He just does not care about the story. He really still thinks Robinhood is this like kiddie brokerage app, and like, it is what it is. Some people have those beliefs, and that's just how he thinks. But he is buying Ethereum on Hood, so he uses the product. He just even Chris, dude. Chris loves Hood. He transferred 7 figures worth of capital into Hood for the 2% bonus, but he has still not bought a share of Hood because he doesn't like the valuation. So it's like it's a controversial name. It's expensive. It's hard to get traditional folks and people that don't like the valuation on board. My answer to is very simple. It's like, yes, it's expensive, but it deserves a premium. It's a generational freaking company. I'm sorry, just like Palantir. Now Palantir has a much bigger premium, but it deserves it. It's really hard to find these names, bro. It's really freaking hard. And I understand why people get so upset when these names do well, because it's really, really hard to find them. So when you're in them, you pay a premium. Now look, we get a bear market, Hood's going to get cut. But every stock's going to get cut in a bear market. So like the whole, Hood bear thesis is that market crash. It's like, okay, well, a lot of stocks are going to get their multiples compressed as well. If we avoid a cataclysmic bear market, not saying Hood has to go to 200, but the idea that it doesn't get into the 130s, 140s, if they keep executing, like I think that's possible. Especially because you can see the vertical expansion that they're getting into. And Vlad wants everything. He wants the crown. And I think in the next couple of years, he's going to introduce even more verticals that we haven't even understood yet. And hopefully that'll be very good for the company. Charles, thank you for the super chat. Thank you, Amit, for this retail community. Charles, thank you for being here. It means the world. Again, thank you all for being here every day. Hello, Jose. Thank you for becoming a channel member. Again, I just unbelievably grateful from the bottom of my heart that we have this community here within all the toxicity of social media. There is something really rooted at the core of this community, which is why all of us continue to be here, which is why all of us, show up at the meetup. Like I told you guys, I showed some of the Palantir employees the amount of people that showed up at the meetups, and they're like, "What? All these people bought Palantir?" Yeah, and I was like, and they've been following the journey for 5 years. Like they were just like amazed that like there's like they know there's an audience, but they're like, these are real human beings that have had their lives changed. And Hood, thankfully, was the second one, and a lot of other people have found other names that have done well for them collectively as a community together. Like I'm just so grateful for this. It is the greatest honor of my life to be able to do this every single day. And with the expansion of this comes more negativity that I inevitably have to figure out how to deal with. But the crux of the root of this is so pure, so special that I'm just very grateful to be a part of it. And obviously this weekend was big, bro. This weekend was big. Like Carp Stream and then Robinhood S&P. Like you kind of can't script it, bro. You can't script it because the Carp Stream was also spontaneous. Like I didn't know if it would happen. And Robinhood, obviously, I had no idea if it would happen. But like, having that back-to-back was really cool. It was really, really free. I don't know if I'm ever going to have two stocks that I find that I cover within the same 2.5 years that do what both of these companies did. Literally, like to the date of getting into the S&P 500 at the same time. Palantir just has, gotten a much higher multiple, but it's like I don't know if it happens again. And so I think in some respect you cherish the moment. When other people say you talk too much about it, I'm saying, well, there's a lot of people that are like millions of people that are part of the story, and yes, you don't compulsively talk about it to the point where it gets annoying, which I really don't think I've done, especially on Twitter. But you do acknowledge and cherish the priceless memories of all of us being together when we find out, some of these milestones that the company's achieved. Or, I was rewatching the chat on the Carp live stream and just seeing everyone freak out that it actually was happening. Like stuff's priceless. It really is priceless. It's what you're going to remember when it's time to die. Not to get morbid, but I always bring up mortality because it's like when it's time to go, what do you remember at the end of the day? Do you remember the random Twitter comment, or do you remember the community that actually cared about building something real? Do you remember that the Ravens are whooping the Bills' ass right here at 33-19, or do you remember that you heard about the Ravens whooping the Bills' ass on a random Sunday night on the live stream? That's what matters. America Unchained says this is getting gay. All right, it's time to go. It's time. It is time to go. All right, I love you all. Thank you all for being here. We're out. I'm going to go get some sleep. Try to wake up early. We'll do market open here. I already booked it for tomorrow. And yeah, I'll try to get the new studio soundproofed over the next week, and we'll keep going from there. So Ravens knocking it out of the park. Yes, exactly. Maybe, yeah, I think maybe I need to learn more about some of these sports terms so I can at least kind of talk about it during football season. Because I really don't know much. Like football is actually a complicated sport, bro. Like what's a first down? Like what is that? Like what's a 1st and 10? Like what does that mean, bro? Like I know what a touchdown is. Like what's a 4th down? Like I've never understood this shit. Like I have no idea how to explain what that means. So I'm gonna have to try to learn some of this stuff as well. All right, cool. That's it. Thank you, everybody. Appreciate it. I will see you guys tomorrow. We'll see how this market turns out. We'll see how Hoodie reacts on the S&P news. And we will keep going from there. Again, I think it could be a good week. What did you guys say on the poll? Did we have red or green? We have, let me see. We have 65% say green. All right. 65-35 green over red. I would agree green as long as CPI is decent. And if so, then we should be able to get through the second week of September. All right. Thank you, everybody. Appreciate it. I'll see you guys tomorrow on the Market Open. Bye, everybody.